All right, good morning, everyone. This is our second day of the Blockchain Select Committee meeting. And we've got a number of great issues to go through today. We're going to start with special purpose depository institution updates, then talk to the Wyoming Division of Banking, look at personal data privacy and ownership, where we've got a few original drafts of legislation to talk through, although we won't be taking action on anything today. And then look at cryptocurrency mining and energy infrastructure updates to continue that discussion. Mr. Co-Chairman, any words before we get rolling?
Oh, wow. So you've given me the microphone.
I don't have to.
You don't have to. You did.
But I did.
You really did. Well, I guess it's just a privilege to be able to be on the cutting edge of technology. And it's our responsibility to determine what is right and wrong with the future of technology as the different questions emerge. And so I'm sure we have a jam-packed day when it comes to ethical questions. And I don't think that belongs to a responsibility to parties or words of mine. So really, we're doing good work. And so
We are.
I'm grateful for that opportunity. And I should give this pen back to Senator.
It's a Senate pen.
The Senate pen, yeah, it's precise. So,
All right.
that's it. Well,
All right,
thank you.
good.
Yeah.
Absolutely. Thank you, Mr. Co-Chairman. With that, let's get started on our first topic of the day. Let's look into special purpose depository institutions. Before we get started, I guess I should just mention our decorum. We have a group that has already been with us, I think, a number of times and experienced, but just the idea that as you're providing testimony, work through the chair of the committee. Please be kind and courteous to all members, all people, and all others whenever possible, and everything will go just fine. So with that, we'll get started on special purpose depository institutions. So as a reminder, this is a financial institution structure that we established back in, I believe, 2019 was when we first passed that legislation. We like to get updates from our existing special purpose depository institutions and learn a little bit about how things are going. This year, we made some tweaks to statute in last session, but I don't think anything was necessarily major, and we'll look to see if there's anything that we need to change or update moving forward. With that, Clarissa, who do we have as our first speedy available?
Mr. Chairman, we have Brian Mathena up first.
Excellent. Let's invite Brian in on Zoom. Brian, welcome. Please introduce yourself and provide us with a little bit of an update on how things are going with Kraken.
Good morning, Mr. Chair. I'm Brian Mathena. I am the CEO of Kraken Financial. We were one of the early SPEIs here in Wyoming, and certainly appreciate the work of this committee and everything you've done to help get us to this point and the success that we've had so far. So thank you for having me this morning. Excited to be here and to give you an update on the business. Just wanted to say, I think the changes that the committee considered last year and made updates to, I believe, like you said, they're not necessarily major issues, but they're certainly, I think, changes that were positive and help us to have a more competitive product going forward. So do appreciate the work on that and the changes that were made here in the past year. Also, just want to extend some appreciation to the Wyoming Division of Banking and Commissioner Bishop for their partnership as we've gone through opening Kraken Financial and getting up to speed here the last couple of years, now being operational and having undergone a series of exams with his group. Really appreciate the professionalism of the group and how they've worked with us to get to this point as well. Regarding our business, we remain focused on growing our digital asset custody business, which has been good for us. We continue to see new clients come on, and I feel like I sign new agreements every week, which is certainly promising. We have felt overall compression in our custody portfolio with digital asset prices falling here, in the last year to nearly half of what they were a year ago. So the overall, crypto market being down a bit creates some pressure for us, but we continue to see interest in the space, and again, we continue to add new clients regularly here. So we are continuing to invest in that particular product. And Kraken Financial obviously sits as part of a broader business with Kraken. And we are now in a position where we're able to help support other product launches throughout the business. And, internally, obviously, we see value in the SBDI and how it can support some of those like other regulatory, other products that have a regulatory framework around them as well. So we consider the SBDI and Kraken Financial within our own group to be, an asset and something we continue to invest in. Obviously, with Kraken Financial, the big news this year was that we received our Fed Master account. So plenty of news and attention around that. That was certainly, a very long process for us and something that we spent quite a bit of time on as a team. And we're, very excited and proud to be in a position where that account was issued to us. Obviously, with the uncertainty around the account, we're now playing a bit of catch up, trying to get the account operationalized and to expand our deposit product and be able to more fully leverage the Fed Master account. So that's something that will still be coming here in the near future. But again, another huge milestone for us, and I think again, another positive mark for the overall SBDI structure that we were able to get that across the line. Overall, again, I think just excited to be in a place here today where we've had success growing our custody business despite some challenges in the overall crypto market, and have the Fed Master account and some of the things that unlocks for us is certainly exciting. And we're looking forward to the future here and to what we can do at Kraken Financial, as our own banking business, but also again and how we can support the broader Kraken ecosystem.
Excellent. Thank you. Any questions for Mr. Mathena? Brian, I wanted to start by thanking you, obviously, for all the partnership and support on Frontier and working with us on the launch of Frontier, which has been successful, and partnering on the issuance and market making of that. We really appreciate that work as well, moving forward the other work of the committee and being such a strong partner over the years. Is there anything that you see on the horizon from your operational needs that we should be looking at or potentially responding to? We want to make sure that we're ahead of the game and getting an understanding of potential speedy needs early enough that we can be proactive instead of reactive. What are your thoughts?
Sure. I think in terms of legislation that has changed and rulemaking and things like that, I feel like we're in a good place. The thing that sticks out to me the most, I would say, is just looking at the overall process of state licensing and reciprocity across the board. We've obviously seen more activity with charters going through the OCC now, and having federal preemption there, kind of alleviates them from some of the challenges that we face as we go through a state-by-state analysis and having to be registered and licensed, across all 50 states. So that to me is kind of the main point that continues to be, a bit of a challenge when you think about the speedies compared to some of the other charters that are out there.
Great. Mr. Co-Chairman, you had a follow-up on that?
Thank you, Mr. Chairman. Thank you, Brian, for being here today. I guess I have a question about the how many users are in Wyoming? Do we see a lot of Wyoming folks that are interested in being a part of this? And I'm really thankful that we have partners here in Wyoming. And so I'm really interested in how locals are using this new platform and how we can facilitate that.
Mr. Mathena.
Yes, thank you, Mr. Chair. Our specific business at Kraken Financial is geared towards institutional clients. So we don't have the same number of clients that you would see in a retail or consumer space. So our client volumes are significantly lower than you would see. They're generally, kind of a low volume of customers with high balances. But we do have Wyoming customers, and actually recently just signed an agreement for another Wyoming customer. So always excited to see those Wyoming clients come in, and certainly appreciate being able to support local businesses.
Excellent. Any follow-up, Mr. Chairman? Mr. Matheny, I wanted to go back to the OCC discussion a little bit. And can you tell us from your perspective where that's at and how attractive OCC charters are relative to Speedy, and maybe why, and kind of even a little bit in the weeds where we heard early on while OCC was making announcements of charter allowances, they really haven't done the work to actually implement that, so to speak. So they're purportedly providing that opportunity, but not necessarily in reality. And so I'm trying to get a sense of where they actually are and how that is comparing with our work on Speedies.
Sure. Thank you, Mr. Chair. So it is obviously, you know, a different charter, being more of a trust charter. At you know, Kraken Financial and having a Speedy license, we obviously have access to be able to provide our clients deposit services as well. So there's certainly differences in some of the products that I think we'll see go through those charters. But in strictly terms of the digital asset custody space, we are seeing, you know, most of our competitors, at least like the more significant competitors that are going that route and are applying for OCC charters. So I know we're kind of just getting to the point now where some of those charters are looking to be approved, and I think we'll probably learn more going forward. But there certainly has been interest, you know, kind of across the space and pursuing those charters.
Excellent, thanks. Committee, any follow-up on that? All right, and Mr. Matheny, just one final ask there then. It seems that from your perspective at Kraken, you haven't identified anything from a statutory standpoint, from a construction standpoint that you're looking at for the upcoming year. Really, your biggest concern is kind of going to be what our next topic gets into a little bit. We'll bring the commissioner up here for a little discussion on that as well, about recognition of Speedies by other states and some of the concerns we have there with requiring money transmitter licenses in other states. So that's still your primary concern of something that we need to get addressed. And obviously statutorily, we can't figure out how to fix anything. If anyone comes up with an idea, please let us know. But is that an accurate statement?
Yes, Mr. Chair. I mean, I think we're at a point now where there's been positive changes made to the statutes, and we're just looking to be operational within the current structure. And, you know, anything that we can do with liaisoning with other states to be able to provide some relief and reciprocity across the board, you know, we would see as a win.
Okay. And preempting that conversation, I mean, we could potentially bring you back if you're still have the time to visit with us as we get to national recognition, which is of Speedies, which is the next like subtopic we'll consider. But how many states do you have to file a money transmitter license to operate in? How can you tell us just a little bit about your situation with regard to that reciprocity and recognition of the Speedy?
Sure. Mr. Chair, I would say it is kind of an interesting question. I would say that the analysis that we performed, you know, some time ago, where we were looking at states that required it versus some states were silent on it, that calculus is changing a bit as states are updating their money transmitter rules, and more of them are looking to incorporate specific language around digital assets and considering that to be covered activity. So, you know, at one point in time where, you know, half the states or so, you know, just kind of a ballpark number may have had some type of like more specific language. I think that continues to grow, and we'll see that just be more the standard as states are looking to adopt something there.
Excellent. Thank you for that. Any further questions? All right, seeing none. Thank you, Brian. Appreciate you as always and participation with the select committee, and look forward to future reports and you know, keep us posted if there's anything that we can do to provide support.
Thank you so much.
All right, Ms. Long, I see you up there as well. Welcome as always. We're so happy to see your face as one of our founding partners on this select committee and hear an update from you as well. Welcome.
Thank you, Mr. Chairman. Thank you to the select committee members. I'm speaking from Custodia's office in Cheyenne. Sorry we couldn't be with you today. We are in the middle of a bank exam. So we've got the Wyoming Division of Banking in our offices for our regular exam. On Custodia's, an update on us. We exited our 3-year de novo period in the fourth quarter of 2025 as confirmed by Commissioner Bishop. And we have been in partnership with our longstanding bank partner, Vantage Bank of Texas, with whom we operated as a depository institution and have been for now coming up on 3 years. As you know, we went into a minimization mode during Operation Choke Point 2.0, having been debanked 4 times due to no fault of our own, just simply because we were in the digital asset industry, and a lot of shenanigans occurred that will eventually become public. And they were instigated by Washington, D.C., not by Wyoming or by our partner banks. And we are eternally grateful to our partner banks who stuck with us, especially with Vantage. That turned into a very important partnership because we started working with Vantage in early 2025 on issuing a stablecoin inside the bank regulatory perimeter, which, as you may be aware, had been Custodia's business plan since our inception in 2020. The CEO called me early in 2025 and said, let's work together to issue this. The Genius Act is almost certainly going to become law, which of course it did almost exactly 1 year ago. And we did 3 proofs of concept in conjunction with both of our respective regulators, the Wyoming Division of Banking, the Texas Department of Banking, and the Dallas Fed in Vantage's case. And we then hunkered down and worked on scaling the system. We are in the second of 4 stages of testing the system at scale. It received the endorsement of the Texas Bankers Association in February. And we have announced partnerships with, we've publicly announced 1, others are in the works to work with bank tech companies. The one we publicly announced is with a company called Participate, which automates loan syndications. And we have already completed a live transaction with Participate to automate the dollar leg of loan participation automation. Loan syndications typically can involve up to 100 or more banks. And up until recent years, that was all done by fax machine. And now it's being done digitally. But one of the challenges is that, as you are aware, Senator Rothfuss, there has not been a programmable dollar that could settle high value transactions that normally have to go over Fedwire. So as you can imagine, when you've got a syndicate of banks of more than 100 banks, the paperwork to syndicate out loans like that and then send 100 Fedwires or more just for that single loan. And then every month or quarter, as the case may be, when interest gets paid, you've got another 100 Fedwires, right? So it's pretty obvious to see how this bank-to-bank use case is very interesting. We have 2 other relationships that we've signed collectively, either formal or informal agreements with, that will be announced soon. And there are other big projects in the works that unfortunately I'm not able to provide an update on today. But what is happening is that this network, because of the sponsorship of Texas, and I must say both Wyoming and Texas have worked very well together. They were the first 2 states, I believe, to sign a joint supervision agreement, the Wyoming Division of Banking and the Texas Department of Banking, for Wyoming Speedy Banks. And that has turned out to be a very significant event because there is a desire on the part of the banking industry to protect the core deposits of especially community banks, which I believe are at risk from stablecoins. And our solution is a major defense that the community banks have to be able to offer this technology to their users, whether it's in the background or whether it's by choice of the end user, is up to each individual bank who signs up. But they can offer tokenized dollar technology to customers on an accretive basis. It's designed for banks all the way up to the largest and all the way down to the smallest to be able to join this network with minimal lift. And we released our white paper about a month ago or so, which describes 3 different ways that banks can integrate with this network. And then lastly, our patent portfolio has continued to develop. We have been granted 3 patents. That's one of the benefits of being as early as we were, is that Custodia was granted the first and I believe most important patent for tokenized bank deposits, which we originally applied for in 2020 and were granted in 2022. There have been other patents granted on that original patent, and Vantage and Custodia have multiple patents pending on our network as well. So I'll stop there. Thank you.
Excellent. Thank you, Ms. Long. That's all great news. Any questions for Ms. Long? Any questions? Ms. Long, I've got a few to just check in with you on. First, with regard to the debanking, and we've had this conversation before many times, and obviously debanking was the impetus for the creation of the Speedy Bank in the first place, right? That way back when we started working on that. Have things improved with regard to the 2.0? Do you feel like you're in a better place now with regard to the Fed's engagement on banking with Speedy Bank, state chartered banks, and any type of preemption? What are your thoughts?
Things have definitely improved, and we've learned a lot. It was coming from the top of the Fed. It was not coming from the examiners on the ground, who almost were apologetic to the banks in executing the instructions that they had received to pressure partner banks of ourselves and others in the industry to close our bank accounts. It happened. There will be evidence that will be revealed about that, and so stay tuned. But has it gotten better? Yes. Am I confident that it can't happen again? No, unfortunately. Nothing has really changed. The removal of reputation risk from the bank examination manuals is directionally helpful, but it doesn't solve the ultimate problem, where you end up with people at the top of federal banking agencies deciding to target industries. Operation Choke Point 2.0 was V2.0. There was V1.0, which hit 30 different industries more than a decade ago. And there was a thought at the time that it had ended. And then V2.0 happened. And I think we will see V3.0 and 4.0 unless and until there is something at the congressional level that creates real channels for appeal of these kinds of situations. And the FDIC has had some impact on this because, as you may be aware, one of the problems is that regulated banks are legally not allowed to talk about the bank regulatory process, including pressures that they're receiving from their bank regulators. It's actually criminal.
That's always healthy.
Exactly. And one of the problems is then that was designed to protect the banking system against bank runs and rumors. So the policy behind that was sound. The challenge is that when someone got into a position of power where they could abuse that to create, to socially engineer against industries that they weren't, and frankly, people that they weren't in favor of, it was easy to see how that became weaponized. And unfortunately, nothing has changed. And I'm disappointed that Congress has not taken action, because there was such clear outcry, including from the president's family himself.
Excellent. Thank you for that update. Can you provide us with an update? It's been quite a while since the committee has heard from you about the master account and all things with the court decision and the Federal Reserve. Could you provide us with a little bit of update of how things have gone since you've last provided testimony here and where we're at right now looking forward?
I can't comment on the substance, but I can point out that Custodia did file a cert petition in time under the deadline that the Supreme Court laid out for us. Justice Gorsuch granted a 30-day extension, and it was filed last Friday. We have not commented in the press. One item that is a fact that often gets missed is that Custodia has a damages claim as part of that lawsuit. I'll leave it there. In terms of interactions with the Federal Reserve, aware of the challenges that Kraken has had on the implementation of its master account, and it is consistent with our own experience that literally everything is just stymied. And the Fed, of course, has been picking winners and losers, and there is no rhyme or reason. It is a corrupt process.
Thank you for that. And yeah, I totally understand certainly that you're very limited in what you can chat with us about right now. We talked to Mr. Mathena a little bit about federal OCC changes and the fact that there's that pathway now in addition to the Speedy Bank pathway. And you and I have discussed this in the past as well, the potential implications of that. And I just wanted to see if you had any thoughts on that, any other commentary that you'd like to provide?
Yes, in fact, actually, both Vantage and Custodia are frequently asked about whether Hazel Network will stay within the state system, and our desire is absolutely to do so. We have worked, both of us, so extensively with our respective state regulators, and in Vantage's case with the Dallas Fed regulators on the ground, and believe that that is of incredible value, because the evolution of this has not happened in a vacuum, and it has happened with quite a bit of coordination between the respective regulators, and we are so grateful for that. One of the interesting challenges, and you asked Mr. Mathena earlier about things that the Select Committee can be watching, is that the Treasury Department they chair a process under the Genius Act called it's SCRC, Stablecoin Review something committee. It's basically where the Genius Act has provided to allow for a state solution for stablecoin issuers that is substantially equivalent to the federal solution. The perception is that the federal solution is superior. We do not believe that. There are certain aspects of the federal solution where the OCC comptroller has used discretion to change the capital requirements for federally chartered stablecoin issuers. And that is not the case yet with the state. But everything's fluid right now. So I don't think we can definitively say where either the OCC or the state will come out on that. I am watching that closely because right now the federal pathway does have substantially lower capital requirement. We hope that that does not stay the case. But it's also true that the federal pathway is not set in rule. It is done by discretion of the existing comptroller, which means that it literally could flip on a dime when the next administration and next comptroller comes in, unless it is actually enacted in a federal rule. So there are, as you may be aware, the rules for defining what is a substantially similar state pathway. And those, I know several states, including Wyoming and CSBS, put in substantial comments to, because the Treasury went further than the Genius Act, and it would unfortunately require some updates from Wyoming regarding the speedy charter if the rules are enacted as proposed and if the state comments are not accepted. But we don't know yet whether Treasury was just doing that to sort of, make sure they prompt plenty of questions and they plan to sort of back off on the proposed restrictions that made the state system less attractive than the federal system. Because the Genius Act certainly made a lot of effort to create a state pathway that is equal to that of the federal pathway. So right now, we remain committed. Both Vantage and Custodia have publicly stated that. We remain committed to staying in the state system. We believe in it. And we are grateful for the work that Commissioner Bishop and his team have done to create a very viable state pathway. And again, that axis between Wyoming and Texas having coordinated in joint supervision is really important because Texas has taken a very important leading position in this arena. Again, it's not a coincidence that the Texas Bankers Association has been so out front on this issue.
Thank you for that. And Commissioner Bishop is going to be providing some testimony in a little bit as well on Genius Act, state regulatory capacity, and OCC coordination to get at exactly some of what you were just talking about. So I don't know if you're going to be able to stick online and stay with us, and feel free to public comment on that later. But I know that if you've got a bank examination going on, you might wander off, and that's okay too. So I'm glad that we got that those thoughts right now. With the OCC, one of the challenges, and we've talked about it on this select committee before, is the ease of preemption at the federal level relative to us having to follow a rule set, which is typically restricted from the federal level, right? They're trying to limit seemingly what states can do in the dual banking system, and they're giving themselves whatever authority you want. You mentioned with the OCC, it's not even in rule yet, but it's sort of a, yes, you're okay, why don't you go do it? And I very seriously doubt the supervision and regulation of the OCC trusts have anything comparable to what we have in place for our Speedy Bank supervision, which is, an appropriate level of scrutiny, right? Very, very well developed, worked through, and implemented. So that's a real concern that the feds, again, still in this dual banking system where we're supposed to be treated as equals, seem to be the greater of two equals whenever they feel like it. Do you see anything else that we can be focused on to try to once again remedy that? That's a fight we've had for as long as we've been working on this, but it is a real inequity that we face where we're working hard to solve problems within the system, and at the federal level, they just step outside the system and do what they see fit.
It's frustrating because I know Commissioner Bishop has taken the right stance, which is that in order to have a competitive state system with the federal system, you can't have 50 different regulators. And I forget the exact phrase. I'm sure he'll use it, but it's home state single examination, and
Right.
all the other 50 states would accept that. One of the challenges is that certain states, especially New York, have historically had extraterritorial regulation. So they regulate companies that are not based in New York that happen to do business in New York, and that's in their statute. So it is a bit of a challenge. One of the proposals, and I understand that the Conference of State Bank Supervisors has definitely, in the face of the fact that so many state money transmission companies have flipped to that OCC trust charter as a de facto federal payments charter, which is what it has de facto become, a de facto federal money transmission charter. That threatens some revenues into all 50 states because they're no longer paying money transmission license and examination fees into those 50 states. So as a result of that massive change in financial services. I understand that CSBS has come full circle to wanting to maintain a state alternative to the federal system. Again, right now, I think a lot of folks are thinking that the OCC pathway is the better pathway, but that may be true in the short term, but it may not be durable in a few years when and if a new administration comes in and doesn't recognize the same treatment that OCC trust companies are being given now. I also, by the way, am aware of the fact that the OCC trust companies are not likely to have an easier pathway than Wyoming Speedies, none of whom are operating Fed master accounts, and not likely to for a while based on our own experience of a message that was given to us that nothing is going to be live in the novel banking area for quite some time. And I'm fairly certain that I know how the Fed is going to block the OCC trust companies from getting master accounts too. So some of them have had applications outstanding for a couple of years as well, with no action taken on them, and that is not a coincidence. The Fed doesn't want any of this inside the payment system, even if in certain circumstances it has looked like it has moved. That is not actually what has happened behind the scenes. And one of the facts that I've ended up concluding from watching it, by the way, there's a tier 1 bank, Erebor, that also doesn't have access to a Fed master account. It's not just the uninsured banks that fall into tier 3 under the Fed system. There's a tier 1, which is FDIC insured, that is also not using its own Fed master account. And that shocked a lot of people when that news went around Twitter. And the answer is the Fed systems can't handle it. That's the bottom line. And it took a while because, of course, they will never admit that. But that's what's actually happening.
Okay. No, thank you. That's good information. I'm not familiar with the tier 1 institution that's being denied. What is their business model that has the Fed concerned? Tell us a little bit about them.
Well, again, it wasn't denied. It nominally has an account,
right,
but it's not using it.
Correct.
Right?
Correct.
Big difference. Big difference.
Yep,
right.
Yep.
And the answer is it's Erebor Bank. I was very interested to see one of the sleuths in the on X on Twitter identify that all of its wires and ACH payments are going through a correspondent bank, even though it nominally was given a master account almost immediately after its charter went live. It has an OCC traditional bank charter. It is a lending bank, but what is its business model? It's essentially the same as the Speedies.
Okay.
It's large. It's not 100% reserve, but pretty close. And it's doing stablecoin and digital assets, custody and payments.
Gotcha. Thank you for that. I had two more things that I wanted to raise with you. One, since I don't know that you'll be able to participate in that discussion next, is getting to the national recognition of Wyoming Speedies by other states. I know this is something that's on your radar and we've discussed as well, and just wanted to get your thoughts ahead of our discussion on that.
Well, the nice thing about the Genius Act is it did actually create that federal preemption for stablecoin issuers. So that is a success of the Genius Act, but for Speedies. However, it only applies to stablecoin issuers. And there's some question as to whether stablecoin issuers can be combined with other types of business. That is not Custodia's plan. We are not in the digital asset custody business. There's a real question whether, for example, a digital asset custody or trading business could be combined with a stablecoin business inside a Speedy and qualify for that federal preemption. But it does appear that for at least the pure stablecoin issuing Speedies, that federal preemption will take effect when the Genius Act takes full effect, which is January 2027. Now, the other interesting question is, will all 50 states recognize that? Will states like New York, that has historically had extraterritorial regulation, challenge that and come after a Speedy that is operating nationally under the federal preemption and force litigation over that issue? I hope that's not the case. And if that does happen, I sure hope that Wyoming will defend the speedies against a state that decides to make, to go after one company for operating under that federal preemption, even though the state might disagree with it. We'll have to see. We don't know. And all of this also, by the way, requires the state to be deemed substantially equivalent in order to even qualify for that federal preemption, too.
Right. Yeah. And that's another thing that we'll have the commissioner talk a little bit about as we get to that topic. And the final question I have, which I asked Mr. Mathena as well, is are you seeing anything on the horizon for your business operations that we need to be contemplating and being proactive about through the select committee, whether it's amendments to Speedy or elsewhere? What do we need to be looking at?
Since we are a stablecoin issuer, very different than Kraken,
Mm-hmm.
I would answer it a little bit differently than Mr. Rathina answers his answer, because that federal preemption question that we just discussed and being deemed substantially similar, substantially equivalent at the state level, we don't know what the final rule is going to look like and what, if anything, Wyoming speedies will have to do either on a statutory basis or in Wyoming's rules to be able to qualify for that federal substantially similar treatment. And so what I would ask is that the select committee retain some flexibility as you go through the latter part of this year. And as we see what the final rule adopted by Treasury is on that question, we'll have to see if there is anything. At this point, we don't know because the rules are not final yet.
Right. Okay. Anything else? Yep, that's definitely on our radar. Anything else on your radar that we need to be thinking about?
No, I as usual, thank the state of Wyoming. It certainly is. It's been a winding path. We, of course, unfortunately weren't able to fully capitalize upon being basically building what South Dakota built in the credit card industry, right? Having all the major companies be domiciled here. We certainly have a lot.
Right.
But unfortunately, because of what the Fed did, Wyoming's initiative was largely stymied in this area. And New York was able to dominate, and it still is dominating. Yep. But we have we're punching way above our weight class, and I think all in all, it still has been a success. And I thank this committee and the legislature and the Wyoming Division of Banking for continuing.
Excellent. Well, thank you so much, Ms. Long. Any further questions for Ms. Long before she takes off? Thank you. And yeah, feel free if you have the opportunity to jump back in for additional comment on our topics as we go through the rest of the morning, but certainly understand if you've got other things you need to do. So thank you so much for participating as always.
Thank you.
Yep. Take care.
You too.
All right. Up next, we have Mr. Estrith from Commercium. Welcome. Good to see you again. And please introduce yourself, and the floor is yours.
Thank you, Mr. Chairman. I'm Nathan Estruth. I'm Vice Chairman of the Board for Commercium Financial. I would like to thank the state of Wyoming and the select committee members for holding this hearing and just highlighting some of these issues and for your ongoing leadership in this area. Co-Chairman Singh and Senator Rothfuss, it's good to see you again. Remember, I had the pleasure of meeting you back in kind of the end of the legislative session there in February. And again, thank you, as some of my other Speedy representatives have said, but thank you for getting that SPDI legislation across the line there. It was very material and greatly appreciated. As a quick update on Commercium, we're working hand in hand with the Wyoming Division of Banking, with Commissioner Bishop and his team, of course, our counsel, Matt Kaufman, to restart Commercium Financial. And we are excited about those prospects, have been engaged in several discussions since I met with you at the end of February. And we also announced a few months ago that we have a correspondent bank relationship with Heritage Bank that is proven to be an exceptional partner for us. They're excited about what the Wyoming Statutory Authority brings. They're excited about the partnership that we've forged, and honestly, they're not only helping but pushing us in areas as we think about launching the bank. We're also in discussion with other partners and potential customers But we'll got some work to do first with the division and to stand up the bank and open, and we'll be excited to talk more about that. We are building a strong team. We're raising funds, and indeed we have meetings later this month set up with Commissioner Bishop and his team. So that's the brief update on Commercium and Financial. Since we don't have operations currently, I won't belabor anything more, just to say I know won't be news to you and certainly not to the colleagues on this call, but we're finding in the broader marketplace that the statutory approach Wyoming has taken relative to SPDIs is a wise and unique one. And we're getting a lot of uptake at this moment. And so we're very excited about the progress we're seeing and the enthusiasm we're seeing, not only from shareholders, but new investors and partners. So I'll turn it back to you, Mr. Chairman.
Excellent. Thank you, Mr. Estruth. Any questions? Any questions? Well, you obviously are at a different stage than some of the folks that we've just talked about, but I do want to make sure you have an opportunity to share your thoughts on some of the things that we're looking at and thinking about, OCC preemption type work in the federal trust charters and money transmitter license, reciprocity, and maybe anything else that's on your radar of the issues that we're looking at. Do you have any concerns as you're working through your process, raising capital, putting together a team on what we're going to have to react to with these federal concerns?
Well, I don't know that I have a whole lot more to add versus what Ms. Long and Mr. Mathena already said, but I will say, I would reinforce, we're very committed to the state system. We greatly appreciate Commissioner Bishop and the approach that he's taking. The more that we can drive, and I know we're speaking to this in a minute, and I definitely plan on staying and listening and learning from him and from the dialogue, but we very much want to remain in the state system. We see it as more enduring. We honestly, for lots of the reasons Ms. Long has already referenced, we also see it as, quite frankly, a better approach to compliance and transparency. And so we are finding a great deal of interest, especially amongst other community banks out there broadly, to that, because of what they have also all seen, right, in different shapes and forms in their business models. So that's kind of our approach. It always has been. It's only been reinforced by what occurred to us and so many others as a result of the federal regulators' moves. And so, yeah, we're committed to the state system and look forward to advancing that and trying to drive that reciprocity wherever we can. That really is our key focus. And we're here to help as part of that dialogue, but we obviously want to get open first so that we can bring some more tangible cases to bear.
Yeah, absolutely. And I think that reciprocity obviously will be one of our priority resolutions, which we don't have a lot of control over, but we're obviously all pushing and doing what we can there. Anything that you see, same question as others, that is on your horizon that you would want us to be aware of or be proactive about or start contemplating legislation based on how you see your business model developing and the needs that you're going to have so that we can be proactive to address it?
Well, Senator Rothfuss, I appreciate you asking the question. I think at this point it'd be premature for me to say, as we are working with Commissioner Bishop and his team to make sure we've got a clear kind of embrace by his team of our business model and the partners that we're bringing to the table. I just say we'll stay in communication not only with the Division of Banking, but also with this committee as that kind of unfolds over the next several months. So appreciate that, and just promise to stay in touch if we have any of that input in a more tangible way.
Absolutely. Thank you so much. Questions? Seeing none. Thank you so much, Mr. Estruth. We appreciate your time. And if you have any other public comment or want to join in and you're still participating, please just raise your hand and we'll pull you in for further comment as we work through Division of Banking and the rest of our speedy discussion.
Will do. Thank you very much.
Thank you again. All right. And Clarissa, we don't have anyone else, right? That's our list for the speedies. Okay. Commissioner Bishop, we don't actually have you formally on the agenda at this point, but I would like to bring you up if we can for a quick discussion on where we're at for national recognition, and then we'll probably take a little bit of a break, and then, well, maybe we'll start into our discussion. We'll see how things go, but obviously a lot of what we were just discussing is in your neck of the woods and under your purview. So our next subtopic is national recognition of Wyoming speedies by other states. This is something that you've been working an awful lot on. And do you have any thoughts to share based on our conversation so far?
Yes, good morning. Jeremiah Bishop, Banking Commissioner. Yes, this is something that we've been dealing with since the beginning. We knew this was going to be an issue. And just to kind of set the stage on how this works and some of the issues that are involved is the Wyoming SPDI under Wyoming law is considered a bank because our legal definition of a bank is accepting deposits. Whereas other states, every state has different definitions of what a bank is. And some of them require either FDIC insurance, lending, or a combination of both. And since an SPDI, it generally doesn't have insurance, it's allowed to, but they don't because they're 100% reserved. And they are prohibited from lending, that under some states' laws, they are not considered a bank. And banks are exempt from obtaining money transmitter licenses. And since they don't meet that definition, they have to get a money transmitter license in those states. And I don't have the exact number anymore of how many states this is an issue with because it continues to change as states update their model law for money transmission, and they kind of change what those exemptions are, things like that. But I know several years ago, our number was between about 17 to 20 different states that SPDIs would have to obtain a money transmitter license in. And with the exception being New York, they have their BIT license that the SPDI would probably have to apply for. That's kind of their version of the SPDI that's been around for several years longer than the SPDI. So that's kind of the issue of what this is there's a hard time to have these state reciprocity. And unfortunately, like we've discussed, a lot of this has to do with the state law of these other states. And some of the other banking commissioners, even if they wanted to, they really have no authority to grant these exemptions because they're bound by their own state's laws. And so that's what would have to change. There are a handful of states where it is up to their respective commissioners to grant exemptions under their discretion. We've talked with all of these states actually, and for the most part, I think every state is open to working with us for shared supervision. But they don't want to just hand it over entirely to us. They do want to be involved to some extent in most cases, but they also don't want to put the walls up. They understand that there is a process that people have to go through, get their license. And so what our approach has been is, since we can't change other states' laws, is we've been working with the other division of bankings or equivalent in these states and say, hey, these SPDIs might have to get a license, but what can we do to make the process easier? Whether it's an expedited review of the license itself, or shared supervision, things like that, or hey, you have to go through the actual license, but they might waive their examination authority as long as we can share our examination reports with them. For example, that's what we have done with Texas. They're not waiving their examination authority, but we've entered into that information sharing agreement with the state of Texas and their Department of Banking, where we can share information with our SPDIs to help their process. And they have committed to that. Again, they're not saying that the SPDIs don't need an MTL, but I think they have been doing a pretty good job of honoring that agreement and doing their best to expedite the process. We share information with them. If they have questions, they can call us, and vice versa. And so I think that's a good middle ground for now. Again, we don't have control over some of this, and so that's kind of our goal, to have these other states accept the SPDI. But then you'll roll into, okay, what about the OCC and these new national trust banks? That's a big question. The assumption is that the OCC is trying to preempt state law, including Wyoming's, for money transmission, which we also, the division, we regulate money transmitters as well. And so they are also trying to preempt our law. However, I don't know if they have the statutory authority to actually do so. The business practices and the products that these OCC trust banks are very similar to what we see with our SBDI and our other money transmitters that are also licensed and regulated by the Wyoming Division of Banking. And I don't think that that actually gives them the preemption that a lot of people are saying. And I will say that the state system, every state, Wyoming included, and the Conference of State Bank Supervisors, of which we're a member, that's one of their strategic goals, is fighting OCC preemption. That a lot of this has been regulated by the states from the beginning. We've been regulating blockchain in money transmission space. That was the original regulator of this. Then the OCC is now trying to come in, and the states are saying, this is our playground. We're actually the experts at this. We're not saying the OCC charter shouldn't be an option. There's, similar to the dual banking system, I think there should be a federal option, but that doesn't mean that you don't have to abide by the same rules. And so there's going to be, I think, quite a bit of legal fights on this. If some of these OCC trust banks attempt to go into states and preempt money transmission laws, those states are going to fight back on that. And in the past, I think this came up, I want to say it was 2018. I think the OCC attempted to have a payment charter that they kind of created similar to this. And through CSBS, there was a lawsuit filed, and that ended up halting that because they were overstepping onto the state rights. And I think something like that could happen with what's going on right now. It's a new thing with the OCC, what they're doing right now. It's very popular. There's been an administration shift. And so a lot of companies are getting that OCC trust bank charter. But I don't think they're going to have, they're not going to be able to just walk into the states and not get MTLs. I think most states will fight back on that. Wyoming probably included if they attempt to do so. And also they're new to this, I think. I mean, that's one of the things that we tell potential SBDIs that come to Wyoming is one of the benefits of Wyoming is consistency.
Yeah.
We have a very well-established process. Our charter process, while it might be long, is pretty much exactly what we tell you it is. And we stick to that plan. And we don't have administration changes every 4 years where everything just completely reverses course, which is what's going to happen with the OCC and the national ones. This similar conversations were being held in 2020. A lot of blockchain companies were going to the OCC, and then there's an administration change and it completely stopped. And it shut down. I think one company got through. I think that was Anchorage. They were the only company that actually got approved. Everything else completely shut down. 4 years later, administration change happens again. The doors are open for now, but there will be an administration change at some point, and we don't know what that will look like. There will probably be another complete reversal of a lot of things. I think that's happening in DC politics in general. Is there's more work being done to reverse the work of the prior 4 years than actually build anything. And I don't think that's going to stop. And so I think what the OCC doing is now, I applaud them for trying to do this, take advantage and fix some of the things that were wrong. I think they're doing a good job of that, but it's not permanent. And also they don't have the infrastructure.
Right.
I think
I was going to
that
ask you to
we've
comment
done
on that. Talk about that.
is, we've been doing this now for a long time through the state legislature, the Wyoming Division of Banking. We have our statutes in place, our rules in place. We have our examination procedures in place. We are getting more and more experience on our examination team on some of this. And quite frankly, the OCC is playing catch up. And they will catch up. They absolutely will. As they should. I'm not saying this, like I said, there is a dual banking for a reason. There should be a state option and a federal option, and they should actually not be competing with each other. It should just be an option. And I think they're finally getting there, but they are playing catch up. And that's our sales, I think. And I've met with the OCC on this. I was hoping to learn more than I did. And I think they have some good thoughts. But again, I think they're learning from what we've done to help stand up there, even just their basic exam program or for some of these OCC trust banks.
Great.
So
Questions for Mr. Bishop?
That's the overall what's going
No.
on and what it looks.
Appreciate that. Yep. Questions for Mr. Bishop? So with regard to the dual banking system, the intended concept is the equivalency where your state chartered banks and your federally chartered banks or financial institutions, I guess I should say at that point, are going to be on an equivalent level, right? Equal playing field. And we struggle to be on an equal playing field, it seems, at all times. This Speedy needing a money transmitter license in 17 to 20 states, where OCC preemption potentially could lead to them needing MTLs in 0 states, creates a situation where you really have a clear reason to have a preference. Do you want to be supervised by 50 states, 20 states, however many, or one OCC, and that's going to then probably bias the marketplace. You mentioned the CSBS is pushing back, and that Wyoming probably would and require MTLs for OCC chartered. Let's talk a little bit more about that, because to me, reciprocity works both ways. If we are not benefiting from something, we should definitely not be allowing a federally chartered institution to benefit from it. Is there action that we should take to make that clear? Should we make it clear? Should we add some type of reciprocity provision in statute? Because it does seem to me that until Speedy banks are recognized as not needing an MTL, I don't want anyone else with a specialized product, so to speak, operating in the state of Wyoming without an MTL.
Yes, and with that, it's not based on charter. It's based on what activity you're doing. So right now, the only very clear national preemption that is allowed these OCC trust charters are stablecoin issuance, because under Genius Act, it very clearly states that stablecoin issuers are exempt from state money transmission. But that also applies to state charters.
Correct.
And that's where if you're a Wyoming state chartered SPDI and you're issuing a stablecoin, you're also exempt from getting MTLs in those states. And so I think it is equal footing, the state charter versus the federal charter. But I think where they're pushing is they want to do all this other activity that is not stablecoin issuance. And the assumption is that they will get preemption from MTLs at the state level because it also falls under that OCC trust charter. And that's where the legal fights will be happening. And I agree. I don't think that is the case. And so what this will look like is if there is an OCC charter trying to do business in Wyoming that otherwise would have required MTL because it's not stablecoin issuance, we would send them a cease and desist saying you are doing unlicensed activity. And I imagine most other states would as well. Now, there might be a legal fight of is that a preemption or not? And that's the great thing is,
Sure.
Okay, let's have a judge decide this. And then we know for sure, and then we can go from there. I think that's how this will play out, is states will start sending cease and desist to OCC trust charters if they think they're conducting what is defined as money transmission business in their states. And one of the other benefits of this is the states are we all talk.
Yeah.
Frequently. We work together on money transmission oversight, bank oversight, things like that. And so I think we're in a good spot to start playing with each other a little bit better. And because no state wants to have OCC preemption. They don't want to have another state charter treated differently than the OCC charter. And so if those, depending on how those legal fights play out, if it turns out that the OCC does have preemption, then I think it's much more likely that these states will start changing their laws very quickly to making sure that the state option remains viable and is on equal footing. Mm-hmm. And one thing that we already have, this is more on the banking side of things, not so much on the money transmitter, is, and most states have, we call it the wild card statute, where state chartered banks in most state statutes, Wyoming included, can be given the same powers and rights as a national bank. In Wyoming, we have to establish rule first, but some states don't even have that. It's just if a national bank can do it, a state bank can do it. Now that goes into how this affects SPDIs is what's a bank? Mm-hmm. And that's what, again, it's a circular conversation, well, but it all kind of ties together.
Let's hit on that a little bit. So with a dual banking system, a nationally chartered bank has the opportunity to operate without state supervision in any state, but I assume that again is based on activity. So there's going to be certain activities that are established and preempted. Can you describe what that looks like? What's on that list of these are acceptable banking activities from the federal charter standpoint? They're preempted regardless of our definition. I assume we can't define out of that, right? That's going to be nationally preempted on that definition. What falls into that category?
Yes, thank you, Mr. Chairman. So mostly one distinction I want to make is national banks or traditional banks, like, the Wells Fargos, things like that, that are operating as traditional banks that generally preempt our state law in most cases. But then there's a separate OCC charter, and that is this OCC trust bank. And that's what's getting all this attention because they're not banks. They might be eligible for master accounts. That's going to be played out as well. They might be eligible for but I think they're prohibited from deposit taking. So that's why I mean they're not an actual bank. So I don't know if they enjoy the same preemption of our banking law.
And that's undecided?
That's undecided, I think, right now. And that's what the debate is right now, is these OCC trust banks are pushing the limit on what individual products and services they can do. The assumption being that these are traditional money transmitters that are going to this. With the assumption that under Genius Act, they can be preempted. They can preempt state money transmission law, but I think that's a wrong assumption on their part because Genius Act is a stablecoin issuance only. So even if you have a national, even a Wyoming Speedy or a national trust bank, if they issue a stablecoin and they want to issue that stablecoin in Wyoming, no, under Genius Act we cannot require a money transmission license. But if they do any other activity outside of that is money transmission, yeah, we have legal authority to send a cease and desist because preemption, there is no national payment charter that preempts Wyoming law. So that's why I think this will be played out in the courts.
Mm-hmm. Well, back to the national banking aspect though. So an OCC chartered trust bank is not falling under the definition of a traditional nationally chartered bank. Tell us a little bit about the differences of what then qualifies you for the full preemption.
Mm-hmm.
I can operate in 50 states.
Yeah, I will say I'm not a full expert on federal preemption. It is a very messy determination. Mm-hmm. But for example, one of the things we've thought about is traditional trust business. This OCC trust charter, that was kind of what it was designed for, was to be a national trust company, which historically has been under state chartering. And Wyoming is a premier location for trust companies. And so for that example, I don't think their trust charter preempts our trust law. Even though they created the charter, I don't think that under the preemption rules, I don't think that applies. I think if you want to offer trust business using Wyoming trust situs, I still think you need a Wyoming charter.
Has anyone tried that?
No.
Okay.
No one's tried that. And yeah, this is something where I think we do need to maybe talk about what that determination for federal preemption is, because it's very messy. It's not automatic preemption.
Yeah, well, I think, overall, and again, with this topic with the MTL and with the trust banks, we should look at what we could potentially do statutorily to make sure things are level and equal. And I think we want to be as open as possible, as long as we are open to the world as much as possible. But putting on restrictions where we're being restricted as a return reciprocity makes good sense, right? So we will go to the least restrictive, but we will not allow our state chartered institutions to be at a disadvantage because another state, and for example, MTL on reciprocity, we would count, if a Speedy Bank were operating in a state that wasn't allowing our Speedy Banks to operate, we would recognize that institution as a bank in Wyoming. We would let them operate in Wyoming, even if they couldn't operate in their home state, based on how things are right now. Because our statute says that it's going to be okay. But we don't have to. And I don't think there are a large number of states where this could potentially be a thing, but I know that there are some East Coast states have I'll call them unique financial institutions. And we would let those unique financial institutions operate in Wyoming, and they would, those same states would not let a Speedy Bank operate without a money transmitter license. Statutorily, we can put up a wall which basically says if you don't recognize a Speedy Bank, then we're going with a strict definition. Everything needs a money transmitter license in the state of Wyoming unless otherwise preempted. What are your thoughts?
Yeah, that is one tool that is it's available. It's very limited. The issue being the Wyoming SPDI is a very novel charter, and most states don't have novel charters. Some do. There are some, and there are more and more that pop up, partly driven by the Wyoming SPDI. For example, in Nebraska, they stood up a charter very similar. I think Connecticut has a novel charter. Georgia now has a novel payment charter for credit card merchant banks. There's the New York BIT license, things like that. And in those states, we have that ability to kind of, hey, we'll accept yours if you accept ours. But those are so limited that if it's, for Texas, for example, they don't have a charter that we could say no to. Now there's money transmission,
right?
But we're already exempting virtual currency from our money transmission license. We don't, if it's only virtual currency, you're exempt from an MTL in Wyoming.
Correct.
Most states, that's not the case.
Correct. No, that's explicit. But again, we're doing that because we're trying to ensure that everything is open. And I think that's the appropriate policy. But if you're not going to let our financial institutions operate in your state without higher scrutiny and regulation, there's nothing that says that we have to provide a free path for your novel institution to operate in our state without that level of scrutiny. And putting in place a reciprocity bill, you mentioned 3 states that had novel financial institutions. I believe at least one of those states is struggling with the Speedy and doesn't recognize it without an MTL. Is that accurate?
Yes, I'd say that's accurate.
Okay. So, I mean, we might not be able to tackle all 17 out of the 20, but if we make it very clear that, at least for this state that has a novel institution, you might want to amend your statute because we're going to provide reciprocity, whether it's good reciprocity or bad reciprocity. We will regulate you as much as you want to regulate us. What are your thoughts?
Yes, I think that is a way to put pressure. I think we don't have as much leverage as that other state, simply because if a or if their novel charter wants to not do business with Wyoming consumers, there's not that many of us. So that's not as big of a financial impact to that company. Whereas if our SBI doesn't want to do business with that much more populated state, they have more leverage simply from that. But that's not saying there's no leverage there.
Well, if they were wanting to do business with some of our financial institutions, for example, that are domiciled in the state of Wyoming, they'd be banking a Wyoming institution, and there are you regulate some rather high dollar institutions that would then effectively be shut out of engaging without regulation. Is that accurate?
I want to make sure I understand that concept, that if we have an entity that is formed in Wyoming, whether it's a financial institution or not, but it is headquartered and formed in Wyoming, would we have the ability to say that company is no longer allowed to do business with, I'll just pick a state, pick any other state? That could get very messy. If that's what my understanding is, what you're saying is correct, that could get very messy. Now, if it's with a specific financial institution, some of our regulated financial institutions are, yes, they are very large. I can think of one of our money transmitters that is very large, but they're already licensed in every other state.
Right.
So,
And yeah, that obviates it right
Yeah.
there. That's the headache we're trying to avoid
is.
though. And we've been trying to avoid it the entire time. The idea that you have to have 50 independent supervisors. And I realize that your out-of-state supervision, I would imagine to a large degree is, yeah, I trust that state. So we're going to have a heavily reduced supervision load because they're being supervised by a credible supervisor. And I'm sure you don't do the same work there, but.
Yep. So one of the things that we're working on as states is on our this is all under money transmission
Yeah.
because this is where the mess is.
Yeah.
Banking, this is already figured out for banking.
Yeah, exactly.
It's money transmission. You have to get licensed in 49 states. Montana doesn't even have money transmission. So there's a 49.
That's
plus
right. I should have said
territories.
49. Yep.
But-
Yep.
But there are also territories, things like that. So anyways, and we all know that this is an issue, that it is a very expensive and laborious process for a money transmitter to get licensed in, 49 states and regulated by 49 states. And so through CSBS, that is kind of one of the things all the states are trying to work on is how do we make this process easier? Because this is where preemption is going to happen. And if the states, Wyoming included, want to continue to be in the conversation of money transmission, we have to change what we're doing because our current process is not viable long term. And that's why the OCC is trying to create a payment charter, is because then you have one license nationwide versus 49 licenses nationwide. It's a laborious, expensive process. And we all know this. And just the hard part is getting all 49 state legislatures to agree on the same language. There's a model, for example, through CSBS, that we created a model law for money transmission. We haven't brought that forth for Wyoming, but most states have. And as you can imagine, no one is identical. Even though it's a model law, every state changes it.
So how does that work though? Is it a model law that still requires 49 money transmitter licenses? Or is it a model law that waives you through if you're being supervised by an eligible institution? Because that's a sale, right? You can sell that creates equivalency, and that ends up being a good product. If it's just, hey, everybody, let's all do this the same way, we'll still have 49 or 50 licenses. I don't know how to sell that to anyone.
Yeah. No, and I agree, it doesn't go far enough. It's mostly, you still need a license, but it's more on the examination side rather than, it's one company, one exam. That's a push. No, I've been pushing that. That's not far enough. It needs to be one company, one license, one exam. And so if we decide to bring this forward through Wyoming, one of the things that we've been talking about is if you are licensed with one other state and we give you the license.
All right.
You don't have to be licensed, but we just give it to you.
So here's an idea then, and this might be a big deal, which isn't on the agenda, but boy, we sure hit upon it. Getting back to the reciprocity concept. We put forward a bill that says that, right? We put forward the correct money transmitter license bill. This is how it should operate. If you regulate to this high quality level, we waive you. We accept you because you're being regulated, one license, and we will accept that license. All you have to do is show it to us or whatever the appropriate thing is. If you don't do that, we will regulate you fully in exactly the same, and to the same degree you regulate us. So if you're regulating speedies and novel financial institutions, we're going to MTL those for you also. So basically a full reciprocity with waiver. And we just put that out there. And any other bill any other state that copies it is going to enter the fold. So it will slowly grow. It won't come all at once. We don't need a compact, but it's a way to solve this problem and get us equivalency with the OCC so that at some point in the future, everybody's waived in because everybody would adopt this because it's in the interest of state chartered financial institutions. So we will get there. What are your thoughts on us doing legislation to make that happen?
Mr. Chairman.
Yes, sir.
Thank you, Mr. Chairman. I just wanted to reiterate the no compact thing. Thank you.
No, I think, and I've had some of these hard conversations with other state regulators, and I think that is it doesn't taste good to anybody, but unfortunately, I think that's where it has to go if we want to remain in this conversation. So I think that could be a good, now that may not help speedies out as much but initially, but it could eventually. But I think the state system eventually has to go somewhere towards one company, one license, one exam.
Well, I think that's the mantra. You've just written the mantra. Please record that in our notes. Because we'll say it a lot from now on. And I think we probably end up getting a bill drafted on that, but we'll do that when we get to directives, which might be coming up right now. Committee, any questions for the commissioner? He'll be back, obviously, after our break in a few minutes. We'll go to public comment next and see if there is any. Thank you so much. Appreciate that, Commissioner Bishop, and we'll bring you back shortly. Any public comment ahead of our break? And we're talking right now about special purpose depository institution updates, as well as national recognition of Wyoming speedies by other states. Any public comment in the room? Any online? No hands are up. Okay. Public comments closed on this topic, and back to the committee. What are everyone's thoughts? This seems like there's actually a clear solution that doesn't break anything and will slowly fix the problem.
Mr. Chairman.
Yeah.
Thank you, Mr. Chairman. I guess I would ask the director, come right back up. If
There we go.
So just one question. And so we had other states and we talked about other states in the union. And I was just wondering if there was any sort of communication internationally.
Oh, interesting.
Yeah.
Reciprocity with other countries. We did that with sandboxes. That's the only place that I can think of where we have reciprocity agreements on sandboxing with other countries, which could go through Division of Banking.
Thank you, Mr. Chairman. Just make sure I understand the question. So we're talking about, acceptance of every state of our SPDIs. Is there anything that we can do with other countries or other, internationally for them to accept it as well? We are starting to talk about this with some of our speedies, obviously that, that will have a global reach. And I can't fully answer your question, unfortunately, because we haven't gotten to that stage of what license might be required internationally. It might be a similar issue. Obviously, I think in the United Nations, there is a payment charter you can get, and it covers, the entire UN. Most likely, they might require that. But for example, we do have, a division does have information sharing agreements with several other countries because we regulate one affiliate, they regulate the affiliate in Europe, and they might be doing similar activity, but they're owned by the same company, and so we have had those conversations with other countries on what that looks like. And it's going to be a similar, I think, discussion as with the states. Is they're going to have their regime, and you're going to have to get licensed there. And then it'll be the same conversation we're having with the existing countries, and also as these states have, okay, what's shared supervision look like? I think that we're already asking other states to give up control, which is one thing. Asking an entire country to give up control, I think, is an entirely different conversation that I don't think will happen. They'll be open to working with us, but they're not going to give up their licensing requirements. But I will say, for the most part, they've been very open to working cooperatively when we have had those conversations. So,
And Mr. Chairman, following up on that question, Commissioner, you have the authority to enter into an agreement to do cooperative regulation right now. That's statutorily there.
yeah. So, Mr. Chairman, currently we have, I think, 2 separate agreements. I think one is with the Arab Emirates and one is with Bermuda. We have had conversations with, for example, the Bank of Ireland. They're the single things like that. Because and we said, hey, if we've talked because we share supervision of affiliate entities, and we said, hey, if we ever need to actually share information, we can quickly enter into an official agreement and send confidential supervisory information. So,
Follow up.
Thank you, Mr. Chairman. And this isn't necessarily a question, but I know Bermuda is a Commonwealth entity. And so that enters us into conversation with larger arrangements. And that's interesting. I'd love to see Wyoming thrive and the Wyoming way go forward to everyone else in the world, including those great partners that we have over there. So thank you.
All right, thank you, Mr. Chairman. Any other thoughts on this idea? And Mr. Chairman, my inclination would be then to get a bill draft that establishes this reciprocity approach, one state, one license type concept, and that's going to be honored through reciprocity, where we will honor if they honor. So we establish some standards. We work with the commissioner on this bill draft to figure out how it should look, and then bring that for consideration at the next meeting, start building out this reciprocity system that both has the punitive side of reciprocity. If you treat us badly, we're not going to treat you specially. And then the hope is the carrot side, which is but if you treat us well, we will treat you well, and we will enter into a license honoring reciprocity. But we'll have to set standards for that, right? We won't want, if they have a horrible system, then we won't enter into reciprocity with them, right? They have to achieve certain benchmarks, which we can include, but those benchmarks will be standardized. That's not going to be much of a challenge. So that's my inclination. Talise, questions?
Yep, Mr. Chairman. So are you talking just about reciprocity for money transmitter licensing or just in general?
It would be money transmitter license, but also probably a preemption aspect. It relates to other financial institutions because you get into the hazy area where you don't need a money transmitter license here. They need one there. So it's not perfectly just about money transmitter licenses, but yes, largely it's money transmitter licenses at its core, with, I'm sure there'll be some strange nuances that creep up. I'll answer that yes. I just anticipate it not being as clean as you said. Any thoughts, committee? Everyone good with that?
Yep.
All right. Any of our online folks that are watching have their hands up, want to weigh in? Not seeing anyone? Okay. With that, then let's get that bill drafted for next time and work with the commissioner to develop it, bring it back, and have a discussion about money transmitter license reciprocity. And with that, Mr. Chairman, we're 3 minutes early for our break, and I think we should just go ahead and enjoy those 3 minutes.
We'll savor it. Thank you.
All right, so let's get back and started back up at 10:15, again with the Wyoming Division of Banking, and we'll have some updates. All right, let's come back to order. It's 10:15. Our next discussion is actually bringing back up the Wyoming Division of Banking to talk through a few more topics. So Commissioner, please join us back at the table and let's walk through a few more updates that we have ahead of lunch. We're starting with a discussion of open banking and where that is at.
Okay, thank you again, Jeremiah Bishop, the banking commissioner. So for open banking, just a background, I think it was 2 years ago. It might have been 3 years ago. We passed the open banking law in Wyoming. Open banking is generally sharing customer data with third parties. And our law kind of gave control of consumer data back to the consumer. Open banking law saying before a bank can share your data with anyone else, they have to provide you a written notice, and get your express written consent for them to share that data. And then we created rules on some other things that they have to comply with, mostly what is in that notice. Things like who you're sharing the data with, limiting it to specific data that is for a specific purpose, so that they're not just sharing everything they have. Basically making sure that the consumer knows exactly what data is being shared, who it's being shared with, open a way for them to revoke that consent, and just get information of how their data is being used. That was a general overview of our open banking rules. So far, we haven't done a lot of work past the rulemaking. So none of our banks are really doing open banking right now. And so we don't have any feedback on whether our rules are too much, too little, things like that. But this all was driven from the federal level, the CFPB open banking rules. I think it's 1033. This all came from the Dodd-Frank Act, which passed back, I think, in 2010, created this open banking data protection statute, and it directed the CFPB to promulgate rules on open banking. They finally finalized open banking rules. I think it was in October of 2024, so 14 years after the law was passed, and were immediately entered litigation. I think it was with a state, I want to say it was Kentucky, and several participants were on this litigation, saying that the CFPB was basically overstepping their statutory authority on this. And so so they filed the rules in October. By December, they paused everything because of open litigation. With the last administration change, I think the CFPB actually rescinded those rules already. And then in August of last year, they issued an advance notice of proposed rulemaking, just seeking comments on the scope of open banking rules. So basically, they're going to try again. That's the last that has happened with open banking at the federal level. Was August of last year. They issued that advance notice, but they have not actually issued any proposed updates to the rules yet. I do know, I think some other individual states are starting to talk about this, New York being, I think, among them, but they're not usually directly with open banking. It's just general data privacy, which I think some of this committee has focused on as well. So I think that's where most states are doing that. It is not specific to banking. It's just general data protection and consumer protection. So I think that's where most things stand. So we haven't really done much with our open banking rule at all, actually, because none of our institutions have used it yet. But so I don't have a lot of feedback on if there's anything else we should do or update, or if we're in a perfect spot. I'm assuming no news
Perfect.
is good news. So, but that's the update on open banking.
Any questions on open banking or discussion? So a little bit about why I think it's, of course, a little bit ironic that we did ours, and a lot of the pushback that we heard was, you don't need to do anything. CFPB has this. CFPB's got this. Rules are coming out tomorrow. They'll be out. Here they come. Don't worry about this bill. And so the CFPB did end up apparently having some rules, and those have been entirely rescinded. So there are no rules. We have the only rules that exist at this point in time. What was the pushback, though, for the CFPB rules that got them rescinded? And what's the expected difference for the new rules that are coming out? Like, what's the motivation here?
Oh, yeah, thank you, Mr. Chairman. I don't know the exact details of that lawsuit. The general concept where the proposed or the rules that the CFP put out severely overstepped their statutory authority. So the actual statute in Dodd-Frank, it was one very small paragraph in a large bill. And then the CFPB used that to turn it into 250-page rulemaking with data points and restrictions and some of the things I think were good, but overall, I think the states, or I don't know if it was the state, the litigator said this is overstepping your authority. That one small paragraph did not give you the right to do what you did. And then I think some of it also was pushback on it. In some areas, it didn't go far enough. For example, I think the CFPB rules were only limited to like a Reg E or credit cards, and that's it. Whereas open banking and data sharing is much broader than that. And that's why I think states have gone more toward, let's not limit this to a single payment type or single product list in general terms, data protection. And I think that's where the next reiteration of the CFPB rules will likely go, since that's what the states are doing individually. The one thing they did do that I think people liked were basically prohibit screen scraping. How do you get the data? Basically, I give you my login credentials and you get everything. And ban that and limit it to, no, you can only have this very specific piece of my information. And you can only use it for this one third party that I tell you it's okay to use. So in some way, it went too far in some ways and not far enough in others. So they missed.
Based on that, I mean, we obviously based our statute on a lot of the early drafts, and then we made decisions based on whether we liked what they were doing or not. But you've got a good timeline of hindsight at this point in time, even though you haven't had anyone using it. Have you seen anything that we might have done wrong, or now with new directions, anything that we should be improving?
Yeah, I think we're in a good spot. When we did the rulemaking, we tried to not overstep, but put some basic protections in place. And we left it non-specific for that reason. We didn't want to back anyone into a corner. We just wanted some basic consumer protections, really focusing on the consumer, or the bank can do exactly what the consumer tells them and nothing more.
And nothing more. That's how we ended up.
And we kind of left it at that because, again, if the consumer wants you to share it with everybody, they will give you the written consent to do so.
Yep.
And that's it. So we purposely left it kind of that broad, but specific enough where it gives you control of the consumer. So I think we're in a good spot. Once we see some other things come out, we can amend our rules as needed.
And you said other states. When we did this, I don't think any other state had passed a law at that point in time. Have you seen other states passing laws, or are they doing rules? Tell us a little bit about what other states are up to.
I've only seen a small summary of other states right now. Like, for example, New York, I think, is a big one, and it's just proposed legislation. It's not even passed yet. I think California has done some consumer data protection things in place, but again, I don't think anything's finalized.
Okay.
I didn't pay as attention. I think this committee last year did quite a bit of work on just overall data protection. I think it was more along those lines. So far, to my knowledge, no other state has actually specifically gone after the open banking concept.
Okay, that's helpful. All right, any other questions? Any discussion? Anyone online? I think I'll just. Yeah, I think I'll offer the opportunity for public comment here. There probably won't be any, but these are three distinct topics, so we'll just see if there's any public comment. Any public comment in the room on open banking? Any public comment online for open banking? All right, good deal. Then let's continue on to virtual currency kiosk regulations update. We passed legislation last year, obviously, that I thought was in great shape when we got it across the finish line. Let's get a little update on how things are going on virtual currency kiosk regulation.
Yes, opening an email, I got an update this morning on this concept. So the law was passed. It was made effective immediately upon signing. I think that was back in March. So we immediately started promulgating rules on virtual currency kiosks. Again, the bill created its own chapter saying that in order to operate a virtual currency kiosk in Wyoming, you either need a money transmitter license or a financial institution charter under Title 13. So that's a bank, SPDI, or a trust company. And then it gave us the pretty broad rulemaking authority on the operation and restrictions of these kiosks. This was brought on, I think, very late last interim. I think it was, I want to say the AARP, I think, was the driver of this. Every state has been cracking down on this significantly over the last 18 months of these virtual currency kiosks. They are, you walk up, you put in cash, and you buy virtual currency with it. Unfortunately, it is highly used for fraudulent activity. I myself was at least contacted by a potential scammer trying to get me to put in $9,000 into one of these. And that's where this is. There's a lot of mostly elder abuse in this area, people that maybe don't understand how virtual currency works. And
Did you say you're the commissioner of banking? I mean, was that like your response?
I did not. I talked to them for a good hour.
Okay.
I
that
just
would've been
figured I'd
funny.
waste their time.
All right, go ahead. Sorry.
So anyway, the division, we issued proposed rules. I think we filed them back in June. The public comment has closed. I am in the process of putting together the summary of comments. We did receive 3 different comments. And once I put together that summary, we will then file the final rules. So some of the things, I don't know if you all had a chance to read our rules that we put out there and proposed. I'll just kind of walk through some of the things we did. An overview, reporting requirements. We said operators must report to the division basic things like their name, address, the total number of transactions they process annually, number of transactions that were identified as fraudulent and denied by the operator, and importantly, the physical location of each individual kiosk that operator runs in the state. We put in some required disclosures that if a user walks up to the kiosk must be given to them by the operator. So they must provide a disclosure that describes the material risk associated with the transaction, the name, address, and telephone number of the operator, and the dates and times that they can be contacted by the user, and informs the user of the refund of fees for fraudulent transactions, which I'll go into a little bit here later. And then just prominent warnings for fraud, the potential for fraud. And then we did put some limitations on the operations of these kiosk operators. We put in a daily transaction limit of $1,000 for any new user and $5,000 for any other user who's not a new user. And we put definitions of what a new user is. We limit the fees charged to not exceed $20 or 20% of the USD equivalent of the overall transaction. That was one of the complaints, was that some of these operators were charging exuberant fees for these. And so we capped that at 20%. Required operators to provide users with a receipt that's available in both electronic or paper format, and require the operator to keep records of all receipts for a period of at least 10 years. This came mostly from law enforcement requests of they really liked having a receipt for them to do their follow-up work when they're contacted by victims of fraud. We require operators to establish basic anti-fraud policies and fully comply with the Bank Secrecy Act requirements, which they actually did anyway, but we decided to reiterate that in our rules so that there's no question. We require operators to use blockchain analytic technology for every transaction and have policies to prevent the initiation of any transaction if the destination wallet address appears to be likely connected to a fraudulent activity, and that they also must retain results of those blockchain analytics for 10 years. Again, most of this is preserving data. That's what we would look at during examinations. Operators must verify the identity of the user prior to accepting payment, including government-issued ID, full name, date of birth, telephone number, mailing address, physical address, and email address. Again, that's already required, but we wanted to make sure specifically the telephone number and email address was included. That's more for our purposes so we can contact users if we need to. And then we put a restriction for new users, including a 48-hour wait period, a notice of the wait period, an agreement with the user of the dollar amount equivalent that will be conducted. This one we kind of struggled with because I think there was some testimony prior that a 48-hour wait period for new users would be incredibly beneficial. The problem is I'll just use Bitcoin for example, is very volatile. So if I give you instruction for a transaction and you hold it for 48 hours, the price could change significantly. And so just a basic notice that could happen, and that they must agree to the US dollar equivalent. I'm giving you $300, you're buying $300 of Bitcoin at whatever that market price is in 48 hours. Just notifying the customer that's the process and why. I require operators to send a request for information to each user within 30 days of completion of a transaction. The purpose of this request to include information sufficient for the operator to determine if the transaction was fraudulent or not. This one was the only unique thing that we put in that I didn't borrow from other states. The purpose of this kind of post-transaction survey is I want to know the percentage of transactions that are fraudulent. I have heard ranges of 1% to 95%, depending on who you talk to. And I want to know if it's 95%. And this was the best way for me. I found, like, how do we get this information? And my intention is for this requirement to be temporary. I want operators to get this information. It will cost them. This is going to be a laborious process for them. But I want that information that I can then get during examinations, because I think that information could drive future legislation on what we should do with these things. Mm-hmm. If it's 2%, fine. We'll amend these rules at a later time and remove this requirement. However, if it's 95%, I think we can come back and request some much more severe requirements. But this is it is a laborious process, I think, for the operators to do this. But I am open to any other ideas on how to get this information. Other requirements is that require the operator to refund all fees to any user that is a victim of a fraud, and notifies the operator within 15 days of the last occurrence of fraud. And then it also requires the user to, within 120 days, submit a police report, a sworn statement or something from a regulator saying, yes, this was fraudulent activity. We don't want just everybody immediately saying they want to refund the fees. No, you actually do have to have a police report follow-up for this. Most states actually require a refund of the entire transaction amount. I think that was proposed last interim, and it was, I think, highly rejected. So we decided just to say refund of fees. The operator should not be making money off of fraud, but maybe they shouldn't be required to fully refund the full transaction in Wyoming. We established examination procedures that we can conduct examinations of operators at whatever interval we deem necessary. Violation section, we allow the division to issue orders to cease and desist, enter consent orders, and impose civil money penalties in any amount as long as there's notice and opportunity to be heard. This language we took straight out of our Money Transmission Act. Actually, same with the examination was, I think that was the discussion last interim, was should we just put this in our money transmitter law? I think you all elected to create its own act. So I brought in some of those other, enforcement actions. This is one area where I think it would be a good idea to actually codify this in law. I initially didn't put this in rule because I don't think I'm overstepping my statutory authority to put this in rule, because the legislature gave us such broad rulemaking authority. But if I was an operator and I issue a civil money penalty, this is what I'm going to go after is, oh, you overstepped your statutory authority and gave yourself the own authority to do this. So I think this should be, if there's going to be an ask, I would ask that this maybe go into a bill to actually codify this. And again, this is exactly what's in place for money transmitters, with the exception of money transmitters. It is capped on the dollar amount of civil money penalties. It's very low right now. I think it's $500 per day per violation. A lot of these are multi-million-dollar companies. That's a drop in the bucket. It doesn't do anything. This one, I said unlimited, as long as there's a notice to be heard and a notice for hearing. So we can discuss that more if there's any questions from the committee. A little bit of a background on where other states stand on these. This is what I wanted an update from this morning, because this is a very common topic with every state. So I think as of right now, several states have completely banned the operation of these kiosks. They are Hawaii, Indiana, Minnesota, Tennessee, and Vermont. States that have bills in process to completely ban them are Massachusetts, Michigan, and New Jersey. So some states are going very severe and just banning them entirely. Some states are kind of doing mostly what we did. I borrowed a lot of this language from other states where they've passed in law and just put it in rule. I didn't want to recreate the wheel on most of this. So I think what this is kind of in the middle of, hey, we're allowing it, we're not going to ban it entirely, but there does need some significant improvement to the regulation of them.
And on the ban side, right, we talked about that, but I think the concern that I had was we just released a stable token, and it would be very reasonable to have a cryptocurrency kiosk where I engage with Frontier and I convert US dollars to Frontier, and it can be operated by one of our speedies. It could be honestly like practically $0 transaction fee. This would be a very normal thing. So banning it, you're not just throwing out what we're concerned about with potential fraudulent cryptocurrency kiosks. You're throwing out cryptocurrency kiosks. And so nobody can do that simple transaction, which very well could be, intentional, legitimate, and not have any draconian fees or any other downsides. So that seemed like a real concern. Were any of them doing it in a nuanced way, or were they just straight up saying cryptocurrency kiosks, goodbye?
Just goodbye. And again, I think that goes down to what is the definition of a kiosk.
Yeah.
In my mind, this is, you've seen them. They look like ATMs. Actually, most people think they're actual bank ATMs, and they're physical things you walk up to. These are not, a mobile app payment platform, things like that. It's not your mobile app for your banking or your credit union or an SPDI if they so choose to. That's not a kiosk. But again, that's where that definition, I think, is very important.
But even for, I assume, those other states, if I had $200 in cash in my wallet at this point and wanted to turn that into Frontier, and then send money to Senator Crago or something, and that was the way I was going to do it, I think the other states just banned that possibility of having that technology available.
Yeah, yes, those states that ban that would require you to go to a financial institution, convert it on their app, and then send it, whereas the kiosk allows you to go to the actual physical kiosk machine and do it there without the financial intermediary. You'd be using the operator instead of your bank. So that was one of the reasons that I wanted that post-transaction survey. Was if we were going to recommend, for example, an all-out ban, I'm not going to do that without data. So I'm just looking for data at this point. With really the sole purpose is what's that fraud rate?
Right.
AARP said it's 95%. I think the operator said it was 1%. I want to know where it's neither. It's in the middle. I want to know what it is.
Yeah. Have you had, and you said that the rules aren't engaged. Did you do emergency rules first and already implement, or are you waiting for the rules before implementation?
I did not do emergency rules.
Okay.
We did normal rulemaking process, and once they're filed, I'm hoping to have these filed probably by the end of next week.
Okay.
And then they will be final, hopefully by the end of the month. And then we will, that will then be subject, the operators will be subject to them, and then we'll start planning examinations to start reviewing all of this data. One, the data, making sure they're actually complying, but again, getting the data. Again, my purpose is what's the fraud rate? Because if it's 95%, we'll come back to you all in November and let you know.
Yep, perfect. Okay, that sounds great. Yeah, I'm looking forward to hearing the results once this goes into full effect. And I interrupted you, so please continue.
That was all. That's just a summary of the rules, kind of where things stand at this point. So we're still evaluating the comments. I have to work with our AG's office to see what I'm actually allowed to change from the proposed rules without having to go back out to public comment. I want these filed quickly.
Yeah, definitely.
So
That's good.
I will probably err on the side of not making any changes and getting them filed quickly so that there's some protections in place. And then I can immediately start revising them if I need to.
I appreciate that. I think that's a welcome approach. Get it, 95%
Mhm.
is 95% now is better than 98% later. So yeah, I
Yep.
appreciate that.
And I mean, we received 3 comments. They were mostly supportive. Some things, some comments didn't like the dollar threshold. Some thought they were too high. Some thought they were too low. One, I think the fraud reporting date, I think we had it as 15 days. One commenter requested we extend it to 30 days just because sometimes it might take 2 weeks for you to actually identify that was fraud. And then the operators don't like that survey.
Sure.
Which I understand. It is an extra burden.
It does seem like an important and reasonable thing. If you don't have any fraud, you don't have a lot to report.
Yeah. And if there's no fraud, like I said, we'll revise rules and remove that. If that's a waste of time and there is 1% fraud, then we can revise these rules and remove it at a later time.
Well, are you only requesting the report if a fraudulent activity occurs?
I'm this kind of post-transaction survey.
Yeah.
We're requiring it for every single transaction.
Okay.
And that's like, it is going to be a lot of work for these operators because every transaction they send, they will have to at least request the information from the user. We're not saying they have to obtain it, but they have to send that request for that information. And that is for every single transaction.
Okay.
So that's one where I think this is our first attempt.
Yeah.
It's not in the right spot for this, but I would rather err on the side of the consumer protection and identifying, hey, what's that fraud rate? And then like I said, fix it later.
Right. And committee, does anyone else have any questions? I've got a couple more to discuss. Representative Yin, was that your hand or were you itching? You were itching your head. Okay. I had 2 things that struck me. First is with regard to potential legislation to provide criteria and details about the civil penalty aspect. We can certainly get that drafted. That's a simple 1-pager. Do you feel you need that in the upcoming year? Is that optional? I'm just trying to get a sense of whether we should get that drafted for this next meeting.
Yes, Mr. Chairman. I think it would be a good idea to put this in codifying law as soon as possible.
Okay.
Just because these rules will go in place and we'll start doing examinations of these. And if we do see significant violations of the rule, we might be using these mechanisms, whether it's a cease and desist. We've already used a cease and desist, the consent orders, but if we decide to go the severe route of civil money penalties, that could be happening even before the next full session starts.
Okay. So you want that?
So I think that would be a good idea to have a draft bill with that. And I did want to open up because the one thing I did change was we removed the limit, the dollar limit on that. And just a little bit of a background on that. So we get accredited regularly by CSBS for money transmission, mortgage, banking, things like that. And there are certain best practice standards that we are, that we get reviewed on. And one of the ones that we always get dinged on is our mortgage UCCC money transmitter, the cap on civil money penalties. The general best practice for states is having that unlimited as long as there's an opportunity for a hearing tied to it. And I will say we've actually had to waive collection of significant amount of civil money penalties
because of the caps.
Because of the cap. We regularly enter into multi-state enforcement actions. This isn't for kiosks, I am divulging a little bit, but on money transmitters where there are civil money penalties, and it's generally a set $50 million fee that is then distributed evenly amongst participating states. We sign on the enforcement action, but we waive collection of the penalty because it doesn't match the statutory mathematical formula.
How much is that? How much is that? Like, tell me historically, what have we walked away from on that?
Several million.
Good work.
Now that's a different
No, I totally understand.
bill.
Yep.
One of the issues is I'll have to provide more detail on this. Is, mortgage, I think those fees go to, I think, the school district that the violation occurred in. Money transmitter, we get it. If that's not appropriate, we should not be getting these. That should go. We shouldn't be the ones determining that the violation occurred, set the violation amount, and also keep it. That shouldn't be allowed. But that's the background on why, for this, we waived to get rid of the cap.
Okay. All right, that's helpful. Yeah, we can talk about that when we get to committee directives, but I appreciate that. Let's see, what was my other point on this? The civil penalty, the 20%, that's what it was. The 20%, you capped it at 20%. 20% seems pretty extraordinary all by itself. I'm just curious what the discussion was around the 20% cap for the fee.
Yes, I will say I just looked at what other states were doing as far as, again, this is just the fee the user pays for that transaction. They ranged from 2%. I think one state was 2%. Most of them were 15 to 30% is where most states were at. So we decided 20%. We didn't want to be highest. We didn't want to be lowest.
Okay.
20% seemed reasonable. The most severe being 2%. That's a pretty low fee these operators will be collecting, but yeah, we just tried to split the difference of what other states are doing. We wanted to stay in the middle of the pack on that.
Gotcha. Oh, that's helpful. And you said you've already had some actions. Tell me about that. You've been putting in place rules, but what have you done on the ground, if anything, in terms of existing cryptocurrency kiosks, operators, where they're at, anything along those lines?
Yes. So obviously these kiosks have already been operating in Wyoming for some time. Some of them did already have a money transmitter license with us because they were doing things besides just virtual currency. Maybe some of them actually just chose to get licensed with us. And so once the law became effective, which was effective immediately upon signing, you needed to have a money transmitter license to operate these. That's all the bill said. Rules weren't in place. So the only thing you needed was the license. And so there were 3 operators in the state that did not currently have a license with us. So as soon as that law went into effect, we could, under the money transmitter law, send immediate cease and desist letters. Hey, you have to shut these kiosks down until you at least become licensed, either Title 13 or money transmission. And we got no pushback on this. I mean, we notified the operators that this was coming and the reason why, and they cooperated fully on this.
What does cooperated mean?
Yes, so they shut down their kiosks. I think some of them are currently shut off until they reprocess their application for the license.
That was going to be my next question. Have they all 3 of them applied? Are they working through the MTL process then?
Yes, they are. I don't think we've approved them yet, mainly because I also wanted these rules to be in place. Yep. And as part of their application, I want them to submit their full plan on how they're going to comply.
Okay.
Other action, this is an action we took, but I will say one of the larger operators in the state has already declared bankruptcy. And they have shut off all of their kiosks throughout the country. Bitcoin Depot is their name, and I think they testified with us, and we worked with them also on this, but they as a recent action. I don't know the driver behind that, but
probably wasn't Wyoming, but yeah.
And the other thing that we've done is we have reached out to law enforcement throughout the state. Again, we're just trying to track down the location of these kiosks and who the operators are. We've identified, I think, well, it was 6, now it's 5 of who they are. We just want to know who we should send those cease and desists to. I think we got that right, but we've been cooperating with them. Law enforcement, we say they're the ones that probably know physically where these are. Once they're licensed with us, they're going to have to let us know, but we've been working with law enforcement on that. And so far they've been very happy with the proposed rules as well.
Great. Any updates from law enforcement? Has this had any effect? It's not fully implemented yet, so probably not. I'm just curious if
Yes, Mr. Chairman, not yet, just simply because the law itself that was passed was very minimal. Yeah. It was licensing only. The meat of the requirements will be in these rules once they're finalized. So I think we'll give it a few months once these rules are final, and then we'll probably reach back out to them and say, have you seen any decrease in this? Have you, has the calls that you're getting from, fraud victims decrease, things like that.
Thank you. I'll note the committee received a generally supportive email from AARP. They seem very thankful for this work, and they were obviously a part of the discussion last year to try and get this legislation passed. So it's nice to see the support from them on this topic. Committee, any other discussion at this time on cryptocurrency kiosk regulation update? I'm going to go to public comment here on this. Okay, we've got Mr. Pope. Mr. Pope, good to see you. Good morning.
Thank you. Nice to see everyone. And Commissioner Bishop, thank you for your work on this. And I just wanted to thank you for including the 48-hour standby period within your regulations. I think that and the limits are the two strongest anti-fraud provisions here. And yes, everything else is important. But I certainly appreciate those two because it is a very powerful thing for people to have new clients, new customers to have to wait for that 48-hour period before the transaction can be submitted. So those are the two strongest points, I think, it's all strong, but I think those are two very strong points in this, and I appreciate you including those.
Excellent, thank you. And any quick response? It seems like there's no question there, but appreciate the support there as well from Mr. Pope. Any further discussion by the committee members before we go to public comment? Any questions from Mr. Bishop? All right. Seeing none, is there any public comment on our virtual currency kiosk regulation update? Online, do we have some? She hasn't joined just yet, but we think we're going to have some. Okay. We'll just
Mr. Chairman.
hum the Jeopardy theme for a moment or something. Yeah. Go ahead, Mr. Co-Chairman. No, we just listen. We would certainly appreciate and take your testimony. Go ahead, Mr. Co-Chairman.
Thank you, Mr. Chairman. I guess my question for the commissioner would be, how would you keep track of any transactions that occur on a kiosk that are with Frontier token?
Go ahead,
Thank you,
Commissioner.
Mr. Chair, Mr. Co-Chairman. So we would not be tracking that explicitly ourselves, but with that blockchain analytic requirement we put in place, the operator will have to retain that information for every transaction, and that will show exactly what virtual currency was used, whether it be Bitcoin, ETH, or the Frontier token. That will be part of that blockchain analytics. That's what they'll have to run, is that. And then we would be looking at that during examinations of what actual, whether it's Frontier coin or anything else, kind of what was the breakdown of volume used at these kiosks.
Go ahead.
Thank you, Mr. Chairman. So what are the financial thresholds that anyone would make, whether it's a more popular cryptocurrency or perhaps it's like a new product that's being offered on the kiosk? Are there any particular thresholds that would flag some sort of investigation?
Commissioner.
Yeah, Mr. Chairman, Mr. Co-Chairman, not by itself. Obviously, we have the limits that we put in place for each transaction, I think covers that by itself. You can't buy a full ETH or full Bitcoin with these levels, at least not in one day. So I don't think there's the dollar threshold that we would automatically flag. Typically, we see anything that's $9,000. For example, the one that called me, because that's a CTR threshold for bank reporting. And so the example that I experienced, I was told to go get $9,000 out of my bank account because at $10,000, they have to report that, the bank does. And so these the fraudsters know this, and so they keep it under that 10,000 threshold. We put it at much lower than that for the daily limit. Now, one of the comments we got was that needs to be lower because will come back tomorrow and send me another $3,000. So that by itself would not create the red flag unless we saw, in this example I just gave, the recurring $3,000 for 5 days in a row with the same user. That could potentially be suspicious. And that's what the operator would have to flag on their BSA program is that suspicious activity. They would be required to identify or investigate. If it was suspicious, file this SAR if necessary. And then we would be reviewing for that as well during our examinations to see if there's any layering going on or potential layering going on.
Mr. Chairman.
Go ahead, continue.
Thank you, Mr. Chairman. So I guess what I'm really asking is there any consideration from your end as to if there's that financial threshold that's met, not necessarily that, but rather the volume of tokens involved and the speculative value that could be made in the future based off of that? Is that something that you guys are looking at?
Commissioner.
Thank you, Mr. Chairman. I'm going to make sure I fully understand exactly what you're asking. I'm not, if we're tracking the volume, Frontier token, if we're just tracking that by itself, is that what kind of, I don't think I fully understand.
Mr. Co-Chairman, go ahead.
Thank you, Mr. Chairman. What I was meaning was if let's say you had a cryptocurrency that was offered by a kiosk that because of the volatile nature of the cryptocurrencies, one day when the purchase was made, it was at a lower price and then all of a sudden it exponentially grew, or the other way around. Is that something that you guys are looking at?
Okay.
Go ahead, Commissioner.
Yeah, no, thank you for that. Thank you, Mr. Chairman, for that clarification. So that's why one of the reasons we set these limits as the US dollar equivalent of whatever the currency is, because they are so volatile. We can't just set it, you can transact, 1 Bitcoin, because that varies significantly over hours or much less over days. And so that's why we set the limits, and the fee, everything is tied to the US dollar equivalent. For that reason, so that we don't have to worry about that. That was the whole point of it. So,
Any follow-up? Okay, excellent. How are we doing on that public comment? Having tech issues? Okay, would you like to come join us and say 5 words and then answer questions? Which there may be none. Welcome. Please introduce yourself. Good to see you.
Good morning, committee. My name is Jessie Defoe here on behalf of CoinFlip, and Clara may be joining us online if that works out, but if not, happy to answer questions. I just want to thank the commissioner. It's been really great in terms of taking comments. CoinFlip was one that already had the money transmitter license, so it's already a really good actor in the space who has been having hopefully great and really beneficial conversations with also police and law enforcement to say, how can we help support you in this? Because fraud, I think no matter where you see it, is just unfortunately running rapid, whether it's gift cards or banks or kiosks. Like, people who want to commit fraud are going to try to commit fraud. And that's something that we certainly don't condone, but want to be a helpful partner in that. And so more than willing to do that. And so happy to answer questions, but just want you to know that we're here to participate in the process. And while I might not be able to answer every question you have today, if Clara can't join, I can certainly get that information to you later.
Great. Thank you. Any questions for Mr. Defoe?
Mr. Chairman.
Go ahead.
Thank you, Mr. Chairman. Ms. Defoe, thank you for being here today. Can you talk to us a little bit about what kind of qualifications your particular kiosk has for the tokens that are available? Is it just like Bitcoin, or is it cash to Bitcoin, or are there other different products that are available on your kiosks?
Sure. Mr. Chairman.
Go ahead, Mr. Defoe.
Yeah, happy to answer that. And we'll see too. You just give Clarissa, you give me the nod if Clara hops on, because we will have her
Time pinch hitter
answer
arrives.
these questions, right?
Take it back.
Yeah, but we do, I know that they use the primarily and well-known currencies. And so it's not like they have everyone on there. And so that's one thing, is that they make sure that those are really legitimate uses and sources of that currency. And I can provide you that full list. I believe that there were 10 last time I checked that they use on a regular basis, so that those are easy to track. So it's not, some random currency that someone hasn't heard of before. trying to be operated on that too. And when you go up to their kiosk, they have many of those things that we were talking about in terms of stop. Are these one of the signs? Who's asking you to make this transaction? You know, there's about 6 different screens that, you know, if you guys are ever, we're more than willing to bring in a kiosk too at some point to say, okay, if I was actually to make a transaction, what does that look like? What are the steps I have to go through? How do I become verified? And so they have all of those steps on there as well. And hopefully, I appreciate the comments earlier, this could be used for the frontier. And by not having a ban and to say, hey, we're stepping into a new realm of the way that the global economy is working. And so I appreciate the thoughtfulness of regulation on it versus a moratorium, because I think when we go to extremes like that, we don't allow business to operate.
Follow up, Mr. Chairman?
No.
All right, thanks. Ms. Defoe, it sounds like, and I'm just verifying, you've been engaged in the rulemaking process, you've been working with the commissioner and the Division of Banking, and so this process is working as appropriate. Everything's seems to be going just fine. That's what I'm gathering from your testimony. Is that accurate?
Sure. Yep, Mr. Chairman. Yes, we have been involved in that. We appreciate the commissioner, you know, taking our feedback. Of course, there were some rules that we weren't as fond of.
Yes, I'm sure.
As you heard, you know, a survey for literally every transaction is a burden on
Sure.
business, no matter which business you would,
Yep.
you know, if you asked Walmart for every transaction of somebody who walked through the self-checkout line, you can imagine the quantity of information that you're gathering and providing and such.
Mhm.
But we also understand, you know, that we want to be players in the space and happy to visit about that.
Great.
So,
Thank you. Go ahead, Senator.
Thank you, Mr. Chairman. So, Ms. Defoe, along those lines regarding the survey, did you propose or did your client propose any alternatives that would have met the same goal, but maybe had less burden on your client?
sure.
Ms. Defoe.
Mr. Chairman, yes, the comments were provided and we do use those blockchain analytics. And so I think that that is one area that could be that solution to it. And so that's something that we hope that the conversation can continue and to see if that would suffice for that. We appreciate, you know, the commissioner visiting too, that maybe this is not something that will be ongoing forever, but once the level of comfortability, the way that we operate in the space and the data that we can provide, maybe that could be changed at some point. But of course, you know, we defer to the commissioner. He's been very reasonable in all of this and taking comment.
Great, thank you. Follow up? Good. All right, Mr. Co-Chairman, I think you had something?
Yep. Thank you, Mr. Chairman. I just had a quick question about, can you tell us a little bit about the user information in Wyoming, how much activity there is with your product here in the state of Wyoming, and if folks are easily able to access it across the state? I know that there are a couple of kiosks in Cheyenne, but I don't know about the rest of the state.
Ms. Defoe?
Yeah, Mr. Chairman and Mr. Co-Chairman, yes, happy to answer that. I can actually send you all as a follow-up of a map of where we are. Wyoming, I would say, is one of their lower use states, not as much as other states that have high volume of that. One of the other competitors that you had heard earlier that's gone bankrupt was more widely used and where we saw some of those problems, but CoinFlip is not as predominant in Wyoming, but happy to share those few locations that are used so on a regular basis and that people are finding great use for.
Any follow-up, Mr. Chairman?
Nope.
All right. Any further questions for Ms. Defoe? Any online from our team? Nope. Thank you, Ms.
Okay,
Defoe. Appreciate
Perfect.
it.
Thank you for your time.
Absolutely. Any further public comment at this time on virtual currency kiosk regulations update? Further in the room, further online, seeing none. All right. Let's go on to the Genius Act. We've got a couple of different things to talk about. The state regulatory capacity for this, which gets to the deemed substantial equivalency question, and then OCC coordination. So kind of two different things to look at here. Go ahead, Commissioner.
Yes, thank you, Mr. Chairman. So again, a little bit of background. I know you all have been getting, I think, regular updates on Genius Act from Senator Lummis's office for quite a while now. She was one of the sponsors of this, but just a little bit of a background. Genius Act was passed, I think it was almost exactly a year ago. I think on Saturday, it created a federal framework for stable coin issuers and the regulation of these issuers. It allows for a federal option through the OCC or a state option. It allows either, a subsidiary of a bank or any other issuer, as long as they meet the requirements set out by Genius Act. One of the things for the state option it did was to be a state qualified issuer that is regulated by the state authority. That regulatory authority must become certified there's a board, I think it's the treasurer, I can't remember who all is on that committee, but we have to make an application to the treasurer's office to become a certified regulator. And the basis of that certification is our stablecoin regime substantially similar to what the federal regime is. And then Genius put the work on the Treasury to create rules on what does substantially similar mean. They proposed rules earlier this year. When I think public comment is closed, and we're expecting, I'm hoping that those rules are finalized any day, because we need to know what that is before we get started on this. If we have to be substantially similar, we need to know what substantially similar means. The Wyoming Division of Banking did not directly submit a comment on this, but I am on the CSBS committee that helped prepare the CSBS comment. And some things I like, some things I think I really don't. The proposed rules said that substantially similar is basically the OCC framework. Whereas if you have the federal option and then the state option, but the baseline is the OCC, that's not an option in my mind. States should be able to innovate and do things slightly different. I think the substantially similar should be what's in statute only. But we'll see where they came on that. They did propose that might be an option, so they might come out to that. I just don't know yet until the rules are final. So anyway, once we find out what those are, we will start the process through rulemaking first of creating our regime. A lot of this we have in place, just not officially. As you know, the SBDI has been in their business plan to issue stable coins since the beginning. So we have done unofficial work behind the public eye of what is setting out requirements for an SBDI to issue a stable coin. And I will say they're very similar to what was in Genius Act. It's just we have to go through the process and actually put that into rule officially so that we can have an enforceable regime to get certified. So I expect to start the rulemaking process this fall. Whatever substantially similar is, whether it's the Genius Act language itself or what the OCC does, whatever it is, we'll comply with it. Our position right now is I think I can do all of this through rulemaking, because I think two different options we have directly from an SBDI. They have incidental activity that they can conduct with our approval, and we could take the position that this is a incidental activity that requires expansion. And so we'll just create rules based off of that statutory language. We might also be able to do it through the statutory authority of the digital asset custody law, because we could expand maybe on that. And then that would open it up to non-speedies as well. It would include trust companies to be an issuer. Right now, I haven't heard of any trust companies that are trying to be an issuer. It really is in the SBDI arena, but I do need to work with our AG office to determine, making sure I'm staying within the statutory authority that I have existing. And so if we determine that we're limited by that, that's something I plan to bring to this committee during this interim of, hey, if I need further authority, we'll bring it to you all and try to put a bill together to put some of this in law.
Go ahead.
Thank you, Mr. Chairman. So Commissioner, just timing wise, I mean, when do we, just so that we as a committee would have time if you do need our help legislatively, I mean, what are we looking at timing wise for all of that?
Commissioner.
Yes, thank you, Mr. Chairman. Great question. That is, I think, one of the areas that I wish would have been better under Genius Act was it really put a time crunch on states. For example, the federal agencies, their deadline to promulgate rules is Saturday. So far, nobody has finalized those rules yet. The law goes into effect, I think it's January 18th of 2027. And so if we want to become certified quickly, we need to make our application by January. That's why I'm hoping to do this in rulemaking as much as I can, at least enough to get certified. And I think I can, but that's the risk of this is if I don't have that rulemaking authority right now, I'll have to wait till July 1st of next year, assuming that a bill gets introduced and is passed by the legislative body. So that could create a delay that could I think it could have some negative effects on our SPDIs. But I do think I can put it in what I need to become certified in rulemaking. Unfortunately, I can't fully answer that because I don't know what substantially similar means today.
Continue.
Thank you, Mr. Chairman. Just to follow up on that, I mean, number one, we could have a law go into effect immediately. So that could happen for July 1. And in the meantime, I mean, if there's something, if the Attorney General's office does have some concerns or questions, I mean, that's something we obviously as a committee could get working on before our last meeting, get some sort of bill draft, or even at our last meeting, we could bring a bill personally, not as committee. We did that last year. It worked fine last year as well. So I guess just keep us even in the interim, even if it's in between meetings, if you could keep us updated via email or let the committee know so we would know, hey, we're able to get cracking on something. We could work with our staff and get something going. If something pops up, I guess I would just ask that you keep us in the loop, which I know you will, but we just need all the help we can get on our end as well.
Definitely. Commissioner.
Mr. Chairman, and Senator Craig, I am hoping to have a definitive answer by the September interim meeting. I mean, if they file the rules this week, I'll hopefully know this by the end of the month. The one good thing is within Genius Act, it does give preference to the certification board for states that already have something in place, which we have had. For example, our SPDI law, you cannot conduct incidental activity as a speedy without our written permission. And we have done that with an existing SPDI. We have given them non-public written requirements they must comply with to issue a stable coin. And so since we have already done that, the law does direct the certification committee to give us preference to get certified. So I think that's one thing that will help us. And my position is if I need to, I'm very certain I have the statutory authority to do this through our SPDI law. And if I have to, we'll limit it to just that.
So that's what I was going to say is this can be two-phase also, right? You definitely have it for SPDI. I don't think there's any question. You've got whatever you need there. Broadening beyond SPDI implementation of Genius to other entities, that's where I think you have a conversation to have. And it's easy for us then to do it in two steps because what we need right away is the SPDI approval, obviously, because we have substantial interest in that space. And then we could have a bill that we're working on that broadens the authority if the authority isn't there. And again, we don't know that. That's what's still going to be investigated. But I think we have a clear path where we can ensure that our existing folks that need Genius eligibility have a path, and then we can build that path further, get it effective immediately, and just have a little window of time where we don't have full coverage. So let's make sure that we're focused on that as well. Yep. Thank you. Let's see. Any other thoughts? Any follow up on that? Okay. Yeah, please continue. We've got more ahead, but go ahead.
Yep. No, thank you, Mr. Chairman. And yes, that is our plan right now. Like I said, we don't have any proposed trust companies or non-speedies who are interested in this. So if I have to, we can exclude them for now.
Yeah.
And I think our existing companies will be fine, and we'll go from there. So some of the other things that we're talking about or that is unclear, and even Genius Act itself, I think will be amended through the Clarity Act. I haven't been following that as closely. I'm waiting for the final bill to pass, and then we'll know. But some of the preemption language of other states, I think, is hotly debated at every level. So that could be amended. I don't know where that will end up at. We're just kind of watching and waiting for that. And then one of the things also with Genius Act is once we become a certified regulator and one of our institutions is an approved issuer, once the issuer goes over, I think it's 10 billion in issuance, they must transition to federal oversight. It doesn't strip away state oversight, but for SPDIs, they would fall under the regulation of the OCC along with us.
I thought there was an exception.
With the yes, that's one thing that I'm sorry, Mr. Chairman, but yes, there is an exception that since we already had this in place,
Okay.
I think we're automatically granted a waiver, but that, there are instances where that could be revoked. But we are definitely taking the position that our institution should automatically be granted that waiver. But it does leave the window open for the OCC to basically decide we're wrong, and there's not much we could do.
Well, I think we need to fight tooth and nail on that, obviously, because that is a unique advantage to the fact that we've put all the groundwork in ahead of time. You'd be a single regulated institution under Wyoming regulation without having to have dual regulation with the OCC. And I don't know that any other state would be eligible for it. I think we would probably be the only one. Is that accurate?
Mr. Chairman, it'd be us in New York.
New York, oh yeah, yep. New York would also. They have a system, but theirs would probably go exactly the other way, which is to make it much, much harder. So I'm not sure that's an equal competition. So we're in a good position there. Is there anything, Commissioner, that we can or should do on that topic to provide either statutory clarity that you might need, or just continue to apply pressure or do anything else? Because I do think that we need to make sure that we have that exception and should take whatever actions necessary to ensure it.
Yes, Mr. Chairman, I can't think of specific action I think that the legislative body needs to take today for this. It's more just let's follow it and see where this ends up and how things go, especially with some of the potential changes to Genius Act. And I will say right now it is just New York. Some of those other states that we talked about before that have novel charters intend to fully take advantage of this kind of preempting other states' licensing requirements. So it will not just be Wyoming. It will be several others that will be trying to take advantage of that preemption language. So
for the over $10 billion exception for Wyoming, I'm curious how that would actually play out in reality, like walking through a scenario of, I don't think we're going to be at necessarily $10 billion right away. So everyone would start operating under the $10 billion cap, operate for a while. You would be the only regulator. Now, let's say their issuance went to 11 billion.
Mhm.
What happens next? How do we assert that authority? How would that transpire?
yes, thank you, Mr. Chairman. So since we're kind of in a unique spot where we think we have the waiver in place for anything over 10 billion, my plan is once we become a certified state regulator by the Treasury Committee, is at the same time also make the claim that we have this waiver as well from now forward. Now, we'll see what they say to that, and if they want to fight that, then we'll at least know what their argument is, and we can start working on it well before any issuer goes over 10 billion. That's our plan, is just try to do that at the same time as our initial certification, and we have to get recertified annually.
Okay.
Which, by the way, is one of the issues with us being the substantially similar being the OCC rules will change at the next administration change. And if the next administration changes and the new head of the OCC changes their rules on December 15th, and we have to be recertified on January 1st, we now have 15 days to change our rules. Otherwise, we'll not be recertified. That's why that should not be the floor.
Yeah.
But that's a different tangent. So
no, it makes sense though. So we will assert that claim earlier than it's needed and have the opportunity to ensure that we're in the appropriate regulatory position before it's needed with some time. That's good to know. Anything else in Genius? I mean, we'll get to the OCC aspect also. OCC coordination on this. Anything else that you see with Genius that we need to start anticipating or working through? And I think we heard specifically also that I feel like it was Texas that passed a law to ensure that they were regulating appropriately for Texas, excuse me, for Genius, so that they could be a substantially similar state. But that was because they didn't already have in place what we have in place. So they needed a new statute. Is there anything else that we should really be contemplating? I feel like we're very compliant with Genius, but just
Yes,
making
Mr.
sure that
Chairman.
we're boxes.
I think Wyoming is in a very good spot because we already have the laws in place that allow us to be more nimble through rulemaking, whereas other states will have to pass legislation. And I think several states have introduced legislation, but again, you have to know what substantially similar means. And so they're putting the cart before the horse. And if substantially similar is different than what's been introduced, they have to completely rewrite their bill through the legislation process. So I think what Wyoming has already done in this space for the last 6-7 years, I think puts us in a good spot to remain competitive, where we can react very quickly through rulemaking to adapt very quickly. I think us and New York are really the only ones I think that are set up for that without needing full legislation. I think the goal today was just put you all on alert. Hey, let's watch this in case we do need legislation, but we think we're fine without it. So I can't think of anything specific that I would ask for today.
Okay.
That would allow us to move forward quickly.
And what other states, was it Texas? I believe it's Texas that passed that. What other states have passed laws to position themselves so that they're substantially similar?
Yes, Mr. Chairman, I don't have an exact answer for that. I don't think it was Texas. I know Georgia introduced the law. Again, I think I think Louisiana did. Another couple states have introduced laws. Again, nothing has been passed.
So with the OCC side of it, once again, I assume that through Genius, a national issuance rather than a state level issuance is going to be advantaged because they start off compliant, right? They are by definition compliant thanks to Genius, and everyone else has to aspire to be compliant. Is that fair?
Yes, Mr. Chairman. Yes, I'd say that accurate, especially with the initial position of Treasury. That substantially similar is what the OCC does. So anyone who has the OCC charter is held to the OCC standard, and they don't have to wait for their state authorities to adapt.
And is that something that you mentioned, the rule process? I don't know if that was already pushed back against. Is that something that there's still an opportunity to push back on, that it really should be letter of the law instead of whatever OCC thinks?
Yes, Mr. Chairman, I will say the comment period for that has closed, and as a state system through CSBS, we push back on that very hard.
On that bit, okay.
But we'll find out what that final rule comes out to. If it stays exactly what was proposed, that the OCC is the floor, then that conversation will continue to happen, because again, that's the Treasury rule. And so I think anytime that opens up again, there will be an opportunity to push back both, and also through federal legislation as well. We could work with our federal bodies and say, hey, this needs to be fixed through federal legislation. This is not what was intended. And you are treating states unfairly from the national.
And so on the effective date of Genius, you could have an unlimited issuance through the OCC that day. And the rules aren't even ready, or won't. It would probably be impossible for a state to even issue on that day. Is that fair based on the the required rulemaking process, or not? Will we be able to, based on the process, have an issuance that day if someone chose to?
Yes, Mr. Chairman, I think we can.
Okay.
Simply because we're allowed, our SPDRs are allowed to issue a stablecoin right now.
Yeah.
Genius Act is not in effect
Good point.
until January. And so since we already, they are subject to only our current law
Right.
to issue a stable coin. And now that will change. We do have to become certified. That's why our timeline is we have to move pretty quickly at the division level of we need to create rules and then apply for the certificate to be certified, preferably before January.
Right.
But there is, I think, a window of when things must be fully compliant.
How long is their application going to take? I mean, this is something which the feds are notorious for. We've applied for things that were implied to be automatic applications, and then years have passed by.
Yes, Mr. Chairman, I think that was what was also in our state comment letter, was there needs to be some very set limits on this.
Uh-huh.
I think Genius Act does have limits on how, there's some deadlines they have to meet, but I think our comments were like, we would like that to be a little bit more set in stone exactly there, so that you don't see the continual delay that we've seen in the past.
Okay.
So.
And what entities through Genius, remind me, what entities would be able to issue through Genius a stable coin? Would that be any financial institution? Do you recall the limitations on who would be an issuer?
Yes, Mr. Chairman. Under Genius, it's anyone who is compliant with the act, but traditional depository institutions are prohibited from directly issuing. They would have to do it through a subsidiary.
Okay.
Now we have the position that our SPDIs are, since they're not insured depositories, can do that directly.
Okay.
Now, if they have, if we're wrong on that and the court said we're wrong, well, we'll just tell our SPDIs create a subsidiary and do it then. So I think that's not that as big of an issue. It could create some other operational things later, but we're taking the position that that's the only restriction that could come up, but I don't think applies.
Great.
Yeah.
All right. We've hit on OCC coordination over and over again. Is there anything else that we haven't hit on with regard to Genius Act and OCC coordination on Genius Act? Anything that we need to do? I know that you've met with OCC and we've tried to build that relationship, and I think it's been going well. But what else with OCC coordination that we might need to look at?
Yes, Mr. Chairman. So some of the things is on coordination is, I kind of mentioned this in our earlier comments. This has also put, I think, the OCC in a tough spot. They're having to react extremely quickly to promulgate rules, create an exam program, and figure out how to regulate this. They have Anchorage in the past, and so they have some experience. But given the complete whiplash, every administration change, I think they're a little bit behind on kind of the back end work that we've already done. This law allows for the OCC charter to issue it, but they don't have the exam procedures in place. They don't have the experience in place. They're working on it very quick. I've met with them and we're actually helping them with that. Again, we're somewhat competing with them, but I also wish we had some help when we were going through this. So I'm offering the help for them so that we can at least be similar. Because if we're similar, that's the whole point of the dual banking, is that they're similar options, and I'm okay with coordinating with them on that. And they've been open to it as well. So I think we're in a good place with the OCC right now. Again, that could change in 2 years. We'll find out, but
yeah, absolutely.
I think we're in a pretty good position for Genius.
Okay. Is that something that, we had conversation about it earlier with Speedy, and it was one of the reasons why we thought Speedy would be very attractive and remain attractive, is that you're under the regulatory structure of the state of Wyoming, and we're not up and down. We've been level for many years. In your experience, is that something that industry and stakeholders understand, that while the OCC might be shiny right now and be attractive, it can change on a dime?
Yes, Mr. Chairman. Yes, I think everyone's aware of this because, again, this is very similar to what happened in 2020. Now, there was a rush to get in the door while it's open, which I totally understand people taking advantage of. But the conversations we've had is some of the ones that they know that's a risk. If they want to accept, live with that risk, they can go through the OCC process. If they would rather just know what the rules are, they can come to the state. And some of our SBDIs have definitely expressed that that's one of the reasons they came to Wyoming, was that they don't like, banks don't like when the rules change.
Right.
They just want consistency. And that's our goal, is to just remain consistent. And that's our goal with trying to assist the OCC, is to help them remain consistent and try to avoid that whiplash. Because in an ideal world, there's a state option, a federal option, and it's substantially similar enough to allow someone to choose whichever their preference is. So those conversations are being had. I just hope that we don't actually experience it. But if they do, Wyoming will actually be in a better spot. So
Perfect. All right. Any further questions on this topic? Further questions? Commissioner, anything else that you want to put on our radar for any of the topics, any of the bills we've been working on, anything coming up for you that you need us to take a look at and get on our agenda?
Yes, thank you, Mr. Chairman. I don't have anything else that I think we need to change. We ran a bill this last session that amended some of our small changes to our SBDI law and opening. Those rules are out for public comment right now for kind of when capital should be paid in, things like that. So we're still taking public comment, so I won't talk too much on that. But I think we have addressed most of the legislative fixes during the last two sessions. And speaking with our SPDIs, I don't think any of them propose any changes. So I think right now we're in a pretty good spot.
Okay, that sounds great. All right, well, thank you. We'll go to public comment if there is any at this point in time. Any public comment broadly on Wyoming Division of Banking or Genius Act related? Anyone in the room? All right, seeing none. Anyone online? All right, seeing none. Public comment is closed. Back to the committee. Any discussion? Looks like we've got at least one action. All right. So, Mr. Co-Chairman, pursuant to the commissioner, it looks like we'll need a little bill draft to codify the civil penalty for virtual currency kiosk regulations. And I assume we'll just look at what we've got for language for the MTLs, but then have the no cap on it instead of the cap. And if you'll work with Talise on where we need to add that paragraph and what that paragraph needs to say thoughtfully, we can have a look at that next time. That should be pretty straightforward.
Mr. Chairman.
Go ahead.
Thank you, Mr. Chairman. And I hope that we're able to pursue this in a way that that we stand apart from those states that have chosen to bar the industry, and instead we're able to make sure that there's an open playing field, because it is important for people to be able to, if they choose to exchange their capital into whatever sort of cryptocurrency that they want to, that they're able to access that. And I think that we should protect that instead of using the state to say that you're not allowed that. And so if we can keep that in mind, that'd be great. Thank you. Absolutely,
Mr. Chairman, I agree. I think that you have to be careful to overregulate. You might see a problem right now, and legislatures often swing too big of a hammer at problems instead of doing it with a scalpel. And I think our approach has been very thoughtful, and I appreciate the commissioner's work on putting together some rules that seem to address the problems that we've heard about while not ending the possibility of innovation and creativity in the space. So we'll continue on those lines. Committee, any concerns about the suggested bill draft? Anything to add? Without objection, we'll ask for that bill draft. Seeing no objection. Talise, is that clear? We're okay on that? Okay, committee, any other direction at this point in time on Division of Banking? Nothing online? All right, that brings us up to lunch, and we're a little bit early for lunch, which is always nice. I do want to start back up at 1:30. Let's get back in here a little bit early, and maybe we get started just a little bit early, but it's never good to start too early after lunch when folks may be zooming in or traveling to get here. So let's make sure we're back by 1:30, but we'll start right back up promptly at 1:30. See you all then. Thanks, everyone.